folks. Let me get this all set up here. Make sure we're live. There we go. All right. I'm going to get started in just a second. I'll make sure that all my technicals are working. If everyone's in here and wants to mention in chat that they can hear me, that would be helpful. Appreciate all your feedback, you guys. For those of you who DM me and mentioned in the either on Twitter or the Discord about things that would help improve my streams to meet whatever you guys are interested in learning and seeing. Something people have mentioned multiple times is their unfamiliarity with the algo, which I understand, and that they would prefer to see some chart-based, candle chart-based trade decisions, and how I come up with my levels, and then how that gets taken into account when it comes to making decisions about whether or not to take trades. And I'm happy to share as much of that as is public knowledge. What you can see here, we've got the NQ 5-minute chart over here. I don't exclusively use any one time frame. I primarily rely on the algo, which is Renko based, so like price movement based, to trigger me into trades. But the time based candlestick charts will often filter out where I should be even trading, versus where I should be waiting. So that is the primary answer to that question, is that I use, while normally on my streams you guys just see this, which is one TV in my trading office. I've got other screens with other charts, including like the one with the DOM and one with the streaming service I'm using. And so we have, on one stream, on one screen we've got this, and then on another screen I've got multiple charts, multiple screens with charts that are time based, right? So traditional candlesticks. And like I said, I move between multiple time frames based on like what kind of analysis I'm doing. Once I've figured out what my plan is, for any like given like micro session, right, which I'll explain in a minute, I will generally not flip around from like 5 to 15 to 30, because what I found would happen, and this can actually happen in the Renko chart too, really any charts, is that if you're looking at too many things one after the next, and you don't have like an objective way to figure out where you're supposed to look when, you're gonna keep looking until you find a setup that fits whatever like your fantasy is that the market's about to do. So for instance, like if I wanted to short this right now, I might first look at the like the smaller time frame, and right away see that we had like a rejection there, and so maybe I'm already interested in shorting just from the 5-minute. But let's say I look at the 5-minute and my first reaction is like, wow, I would have loved to short this level, but now it really feels a little bit extended, and the whole range has been kind of in this tight area. So the mistake that I'll make if I have too many charts open at once and I'm looking at everything is I will just literally flip through every time frame until I find one that looks good to short. Which is a huge leak, right? That's a big mistake, because what you'll end up doing is just taking undisciplined trades everywhere with just more and more risk. Because if it didn't look good as an entry on the 5-minute, the only way you could actually make like a 30-minute candle size trade work is by taking bigger risk for a bigger reward, right? So if you're gonna use any charts, which is most of you, I don't care if they're Renko or Heikinashi or anything, any chart, you need to have a process like that's very objective, that says like, this is how I go about determining whether or not I'm trading here, and then this is how I go to about determining how I will enter the trade, right? Which are two actually totally different things. Like, am I trading in this area? And if so, what gets me in, right? What has to happen for that like confirmation that this level is actually accurate for a good trade entry? And like I said, the big mistake is making a directional decision first based on like anything you're looking at, right? Like let's say you're looking at the 3 minute or even worse like the time and sales in the DOM, right? You're just looking at like order flow and you're like, oh, big seller, right? But then you have to take that to the next step. You can't just, in my opinion, you can't just like mash the sell button because you see some like signal on unless there's an objective reason that says every time I see that, I take a trade. And so instead, if you see this and you're like, oh my God, I have to short, and then your immediate reaction to that is, oh fuck, I've got a level right here. I'm so close to, like, I can't really short this, right? And then that's fine. But then if you go to the next level of, well, hold on, what does it look like on the 30 minute? And, oh wow, we could come all the way down here. No, this is definitely a short, right? And then you hit short. That's where the error comes in. And there's a jump from identifying something that you recognize as having like directional weight, right? Like it looks like the shorts are taking control on this time frame, and you can't project that idea onto other time frames and assume just because the 5 minute was a good short like 10 minutes ago that it means that the 30 minute will also be bearish. You just can't do that. And so in the same sense, you don't want to do that with these charts either, right? Even with an algo. Like I've got an algo that it's been programmed to tell me to signal like this did when I was setting this up, pink bar, orange bar at the top of at this interacting with this blue line, that signals that I can short there with good risk reward, but whether or not I want to short there is going to be totally dependent on the price action around this area, right? And so it's a multi-step process. If you get stuck on one of those and don't have the other one, your trading is going to be inconsistent. You're going to either get emotional and find a way to make your analysis correct, and then like not know how to fix it because like you were right that it was short 10 minutes ago on the 5 minute chart, but assuming that means we're going down on the 30-minute chart is not accurate. And if you shorted just then, right, thinking you must be coming down here, and you put your stop where you would on the 5-minute chart, you can easily get your stops eaten to death doing that, right? Because you're like you're looking for a reward on the 30-minute chart, but you're managing risk based on a 5-minute pattern. That and if you really think that through, and you think about, think about, just look, right? How often does that work? Like, let's say you decided here that this looked bearish for one reason or another, and so you sold here, and you put your stop here. There's nothing wrong with that as long as your target is the swing on the 5-minute chart, right? But if your target is this, which you found on the 30-minute chart, down where is that here, right? You're gonna get stopped out a lot, and you'll get into the trade thinking like, oh look, I have 10-to-1 risk reward, right? But your 5-minute pattern or signs on the DOM or the footprint or the 24 tick Renko chart, right? Something like really, really fast paced, it's not giving you enough information to like to take it to the next level that you're actually going to take out a swing on a higher time frame. So this is, and like I said, I'm sharing this because it's a leak that I still catch myself doing occasionally, but I'm aware of it now. Whereas there was literally a time where I would do this on a regular basis without any awareness. And after doing it over and over and over again, not realize I'd backtest the ideas, and they seem to be working, right? Like whatever the trigger was, and because yeah, on the 5-minute this might look short, but if I'm getting greedy and trying to get trying to make decisions on the 30-minute chart based on 5-minute information, um, yeah, those back tests that work on the 5 minute that said that this pattern usually results in a down wave, let's say, it does not mean that it usually results in taking out a swing on a higher time frame. So that's it's just a something I thought I'd share when people ask, like, why don't you share like the candlestick charts in addition to the Rankos. And it's not that I'm hiding anything. I don't have enough screen space. But the truth is that if I'm looking at the Rankos, you have to assume that I've already done some analysis on the candlestick charts, usually starting from a higher time frame and then moving my way tighter until I get to the intraday. And the idea is, when you're doing that, you want to identify areas of interest, and areas where, and those are primarily where there's liquidity, and you can find liquidity based on where you think traders have placed their stops. Traders trading that time frame have placed their stops, and you can use the voodoo range levels, which I share every Saturday, to help you with that. Obviously, every voodoo range level is not going to be a liquidity location all the time, right? They will probably all be one sometime during the week. Well, not all of them, but any in the area. But whether or not, like, a good example is this. So today, during the regular trading set hours here, you can see that on the way down, we traded through what is that, 11,935, pretty easily on the going down, right? And then we found some liquidity above it here, but we ripped right through it, and then we did the same thing here, right? So you can't just short these because there's a line there, even though sometimes you do get this. And I know that's frustrating, but it's just the way it goes. Like, it's hard because you see stuff like this, and then you notice it here, and we think like, oh man, I missed it. Well, that's okay. I'll just short the next one. And well, that might have worked this time. That it's not that simple. Instead, what you want to do is you want to look and ask yourself, is this area being defended by one side, both sides, or neither? And is there a reason to think that there's liquidity here? So, for instance, let's say we were in the morning, right? And we were trying to anticipate whether or not this move was going to come or this move was going to come first, right? Like that, because many of us knew that we were expanding, but it's often hard to tell. Are we going to go up first and then down, or down first and then up? Like that. That's a really, really difficult thing to do, and there's not a great method for that, except for the fact that we should assume that price is going to go wherever there's liquidity, and generally, if there's recent liquidity put somewhere and price goes that direction, it's headed to that liquidity point. So, for instance, pre-market here, right, in this, like, what is that, 2 hour period right here, you can see that shorts had control of the market for that time being until the open, right, or into the open, I should say, and then we had open auction before we move higher, and all of those shorts, you can assume the swing that they might have been working off of for their risk is probably here, right? If not there, here or here. I think we can all kind of agree that that's like the natural place that shorts would want to place their stops, is behind those highs. So it should make perfect sense that after taking out this low down here, which is where all the longs who bought this would have put their stop, so it flushes that low, right? Hits the voodoo range level here, and notice the distance between here. That's very helpful. These are a lot more reliable, and you got distance there. And then where is it going to go? Well, it's going to try to take this liquidity that's up here. Well, in the process of doing that, what does it do? It crosses a voodoo range level, right? So the algos, the mean reversion algos that are running all the time, they're basically like their breadcrumbs, what the whatever they leave as like evidence that they're trading is how I'm building these levels. They are active all the time, and so they respond to that, but there's buy pressure here that holds it up at the midpoint, right? And so where does it go next? Well, it's going to break this almost for sure, because there's liquidity still up here. See how this is still below this high here. See that? So like this is just prepping for like the what's it called? The release. And when it's a perfect pour high like this, just assume it's gonna get beat. Maybe not right away, right? You might flush stops first and take out a low. See how that candle went under this candle? That's by design. That's to make sure someone gets fucked before they miss. Like anybody who's got really tight stops is gonna get fucked out of that long. But they're gonna make sure that anybody who shorted this move into the open, that they all get beat. And so if you think their stop is probably going to be here or here, right? Now that's going to catch most of them because most people will put it like 1, 2, maybe 3 swings behind. Most likely after we see this pullback here, after this pour high, they're headed for this. And when they take it, where are they going to reverse? Usually, once they get to that liquidity, they're going to reverse at or near a voodoo range level or a midpoint. See how the midpoint also acts as resistance? That's these dashed lines. And support like this. Is it perfect? No, right? It's not going to be like exact all the time. But you can kind of, it's almost like the market's headed there, like it's got a target there. And once it meets that target, it makes decisions on where it needs to go next. And that, like I said, is based on where there's current liquidity waiting. So once they cleared this liquidity here, right, and ran out of buyers, you can see that what's it called? Volume was kind of decreasing in the end. We did have a little spike here, but that was just a result of short covering most likely. Oh, nice little move there into London Open, or no, DAX Open. It's right at the POC here. This level is acting like a POC, so I'm not trading around this level. I'll show you why in a minute. I realize that it's moving, but if we would have bought this, we would have been totally fucked. So you don't want to trade when it starts doing this. You got to trade the edges. You can't just take that short here. And I'm not going to trade the DAX anyway. I did not expect it to go quite that far, but here's what it's doing. It's taking out that low. We could literally do this live right now, right? Like here's where all the stops are. It takes out those stops, and that's your only opportunity for a scalp there to target back into the middle. And you'd have to be quick about it because this is a really choppy, like it's an area that's been identified as fair. If you look back, it's where everybody has traded, and it's traded through that voodoo range level very liberally. And if you, whoops, I did not mean to do that. Hold on, let me fix that. If you that should be locked. If you go back to the profile, you'll see in this case, how long is this profile? 180 candle profile has that POC literally right on the line of the voodoo range level, right? So like right there, as soon as we see that, we should just basically like draw, like we could draw literally like a black rectangle over all this volume and just say like, I don't even care what happens in there. Like anything in here, like you could literally fill this in black and you'd probably trade better. Like just don't, I mean, here, I'll do it, watch. Like if you just don't touch any of that. Look at how well you do. Oh, does it not? Oh, I see what I have to do. And then I gotta move this up. So imagine that all of, okay, imagine that all your entries, I don't know why I can't get that to, I guess they don't like that. They assume I don't want to do that. Think of all your entries were above and below that rectangle, right? That's funny that it won't let me show that. That's weird. There we go. I just have to select it. So imagine all of your entries were under here for longs and over this for shorts. Like, I'm not saying it'd be perfect, right? But you're gonna do a lot better than if you try to take all of these crosses to that voodoo range level. And why? Because that's where all the volume is. See that? You just got like a huge volume build here. And that goes, here, I'll get rid of it because you can't actually see anything. But that goes all the way back to here, right? And this, yesterday, that expanding range centered, it actually goes back to the night before, right? But that, it's basically this. Yesterday's move, that's where all the volume was. So everyone agreed that that was a fair price, but they disagreed whether or not it was fair up there and fair down here, right? So again, you could just take the voodoo range level. That's one voodoo range. That's two voodoo ranges. And if you're on a higher time frame, now you're shorting this and buying this, right? And just avoiding all of this if you can't trade like scalping, right? So that like the concept stays the same no matter what time frame you're trading, but it's really important to know that you really should just ignore all of the signals that occur here, no matter what your technique is, what your strategy is. You're gonna have a ton of stops if you take all these. I personally took a stop right here and didn't heed this advice. And then when I realized what I did, I didn't short when I exited, and because I was like, what am I doing buying in the middle of this fucking chop? And I didn't really see it. It's really obvious now, but I didn't see it quite as clearly earlier today. And in retrospect, again, fantasy trading, perfect would be recognize that this is wrong, get stopped out and immediately reverse and take that short, right? And that looks sexy. It's like, oh, how nice that would be if you could do that. And I'm not saying you can't do it, but the reason this doesn't work here is primarily because it's in a high volume node, and that in general you want to be trading off the edges. And so if you have a volume profile, it doesn't have to be on this chart, right? It could be anywhere, but if you have it somewhere on a screen, and you basically just see these high volume nodes as no trade zones, where everybody kind of agrees that this whole range is like practically the same price. Like the market sees no difference between 11,950 and 11,915, right? Or whatever the close was here, 11,925. Like that whole range there is completely agreed upon, right? And so you do well not taking trades in there. It would be a good target for mean reversion trades to trade back through and to start taking profits in there, but it's not a very good place to enter trades. However, these areas underneath underneath that volume build, especially when it drops off like an edge like this, it's more pronounced up here, where it literally just like drops suddenly. Here it's almost a 45-degree angle, and you can see that the edges are here, right, and then around in this area here, and so that's developed. This one is developed here, and now we're swinging under that, approaching this voodoo range level. But if you look really close in there, you have another one right at the voodoo range level. See that? There's another edge here. You'd see it easier on a smaller time frame. Where's my profile? Somewhere. I don't know. Here it is. It's like, what the fuck? Okay. It's not gonna be quite the same on this time frame, but you'll still get the idea. So here, the difference is from this to this. This little low volume node in here is an obvious good place to look for trades, right? So when you're seeing a lot of choppy action within an area, oh yeah, that was actually a pretty good trade. It's 4 minutes into DAX. I'm usually gonna wait and let them work this out. But that area is somewhere where we would be okay longing, whereas up here in this area is really where we want to be short. So before I even look at my execution level of program, right? This is telling you exactly when to trigger my trades. Before I even look at that, I'm gonna have to every time I sit down to trade, the very first thing I always do is determine, do I even want to trade here, right? And when I first started the stream and we were in here, the answer to that was no. We've now swept all the way down to the bottom, so there would have been a trade opportunity there, but we weren't quite prepared. And like I said, it's right at DAX open. I don't usually trade those. But once you figure that out, you can look down and say, okay, well, I primarily, you could do this the opposite way. You could say, I primarily, let me change that, want to trade, whoops, you can't see shit. I want to trade down here or for longs, or up here for shorts. You could probably stretch it a little bit, but usually I stick with the Voodoo range levels. But the purple pivots are pretty good, reliable. During balance like this, the purple pivots are pretty reliable entries. As long as the edge doesn't sit right at the POC. But so like the bottom of this purple pivot's gonna have a lot more slop than the top will. There are still ways to enter here. It's just harder. But for instance, here I could say, okay, I want to be long above 950. Only short above 950 and only long below 913. That'd be a very simple way to start once you decided that we're in balance. Now, you would know you have to accept that would change if you start to see trending behavior. And trending behavior, a good example of trending behavior would be breaking out beyond one of these Voodoo range levels on the outside and then retesting them from behind, right? So like this, when it goes all the way down, it breaks under a Voodoo range level and then it comes back, tests it, and rejects, right? So right here where I stopped out of that trade today, that's why that was a stop, because I longed this thinking for some reason that we were going to balance here, which in retrospect looked kind of silly. Because these guys were clearly trapped, but at the time it made sense for a scalp and didn't hit my target. And then when it stopped out, it would make sense here to short because now it's momentum. Whereas before that, this here was a momentum push right there, but I missed it. It's at the midpoint. See that they broke under the midpoint with like in this case it was decreasing volume, so it's a little bit sneaky, and then the increasing volume was actually on the retest, and so that it's very easy. Oh no, I'm sorry, the increasing volume was on the breakout. So really the momentum didn't start till here at 85. This candle here, not that that candle right there, that goes through the Voodoo range level. That's the one that started the momentum move, and so I really shouldn't have been longing here anyway, because now momentum's with the sell side, and so the next entry is actually for me is either short this because it's near the midpoint with momentum, or short this. And notice I'm not shorting breakdowns generally. I'm not looking to short this because in futures, breakouts usually retrace. They might not fail essentially, but you're going to get a better price than what you'd get on the breakout. And so the result means that I don't have to worry about knife catching, right? Because I'm looking for only balance. I'm only buying the edges and selling the edges when we're balanced. So once this happens, I shouldn't be knife catching here. And I certainly would not be knife catching down here. I probably wouldn't be knife catching down here even though I have the level, right? But instead what I want is once I've seen them establish a level like this down here where the arrow is, see how there's excess that got put in down here under the level? They got underneath it. They immediately rejected. This is on a POC of a down wave, I can show you. But when we ripped here, we retested into that level again and then bounced. So you can either take this one or this one. But look, like you got to think about how low stress that is, right? I'm not worried about this candle or this candle. I'm not even looking for a trade here, right? Which kind of freaks people out because they're like, everyone at first wants this long, right? They're like, I want to get long here. And I mean, I could have probably caught this one, but I want to get long here and here and here, right? Like that's what your eyes do. They especially on these big momentum moves, you're like, I want to get short here and long here and make a lot of money. Like, yeah, I'm sure you do, but what if I told you that the only way to catch those is to be right about 25% of the time, and 75% of the time you're gonna buy here, 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 and here, and maybe up here too, right? Like, and then you're also gonna sell like along the way, like here, here, here before you get this, and here and here and here before you get this. So you'll get three sells that fail to materialize into anything real before you, and then you'll get one of them that like actually works. If you stick with that style of trading, it can work out, right? Like this will pay for your stops technically, but that also means you have to hold through all this to even get this extension. Otherwise, you take a stop here, you take a stop here, and then you get a short here, and then you get trailed out, right? So you got this much, but you basically lost that much in stops. So it's like, it's in my experience and in my coach's experience, it's very difficult to target when trading futures. It's very difficult to trade momentum with the intention of catching edges and riding these huge waves. I'm not saying it can't be done. It can. You're just not going to do it consistently without taking shots that don't work. So it doesn't mean you can't do it. You just have to do it in a time when you're not going to lose confidence. And if you do find, what happens to me is right here, I'm like, oh yeah, this is clearly short. They're rejecting right at my level, right? And so I'll short this and it'll get stopped out, and then I'll short it again and it gets stopped out, and I'm like, fuck, I was totally wrong. And even though it sets up beautifully up here, I get psyched out, and even if I take the short, I'm out right here. As soon as it starts to show any buying in that spot that I got stopped out earlier, I'm like, fuck, I'm out. Right? And then it goes shoom, shoom, and like, you miss the whole thing. And so I took two stops, and I got one win, but that one win barely paid for those two stops. Right? And so that, it becomes a problem of, like, you have to see whether or not, if you executed your system perfectly, if it would be profitable, and then ask yourself, am I profitable taking that trade? In my back testing, it worked out, right? It was like, I can take these because, yeah, maybe they only work 30% of the time, but when they work, the back tests demonstrate that they give like 100 to 200 point extensions. So my like very logical, objective brain saw that and it's like, okay, I've got every right to short this at least twice. Because again, it's going to work 30% of the time. So, you know, if I'm right on the first and second time, like I'm only going to occasionally miss times when it took 3 shots. So it seems like good odds, right? If I'm right and I'm going to get 100 points and I'm wrong, I'm going to lose 15 points. It feels like good risk reward. But the problem is, what usually happens is I short, get stopped, don't short like I'm supposed to, and miss all this, or do short and only get 15 points from it. So if that's you and you're not following through with like what your plan is supposed to be, when you did the back test to decide whether or not it's a good setup, then what you have to ask yourself, like a serious question, probably is not going to be easy to answer, and that is, am I going to be able to trade this, even if this setup works on paper, like it looks good on paper, it should work more often than it doesn't. It should, the risk reward is like over time, a string of trades, it's going to be profitable. You have to ask yourself, like, is it realistic? Can I take this trade 3 or 4 times in a row, and when I take it on the 4th try, am I realistically going to be comfortable holding it when sometimes it's going to come all the way back on me, right? And it might have been the 3rd, like I might already have 2 stops, and now this is like my 3rd entry, and you have to ask yourself, like, am I really going to hold through this? Because if you're not going to hold through this, then you don't have a 5-to-1 risk reward, right? Your max favorable excursion's actually right about here. And so that's where our eyes play tricks on us, and even back tests can fool you, because in reality, even though the back test might get this, and you're like, dude, risk reward is amazing on that trade, in reality, most of us are getting like this, and I say most of us not because I think that you guys do something wrong, but in my experience with those others that I'm trading with, that's been the experience, is that you can have something that should work most of the time, but to get it to work, you need to execute something that's really uncomfortable for you, right? Holding big size to this whole move, knowing it could extend. So if that's an issue for you, and because I found it was for me, the solution that my coach has recommended and that I'm really trying to implement is to let these happen when they like fall into your lap, but don't go to the trading day. Don't focus on this as like what am I trying to say? A good trading day does not have to be the day that you catch this. I mean, obviously your P&L is going to be good if you happen to hold through all that, right? And it's probably a good time to be done with your trading if you knock that out, because that's for the day, because that's a pretty unusual move, right? For most people. So, but the point that I'm trying to make is that whatever your system is, if all it does is looks for this, and when you hit it, you have a really good day, but the 70% of the times you miss it or mistrade it, even if you had the signal, you maybe break even or worse, then you have to stop optimizing your trade decisions with the intention of getting these moves, which is, like I said, really counterintuitive. The idea that I see this big move and I say to myself, that's not my trade if I'm not in it already with some other way, because my system doesn't need this, right? I can make money on a regular basis even if I miss this entire thing as long as I'm not longing it all the way along, right? That's the key. You can have a system that pays you like during other phases of the market, like when it's bouncing off of these rectangles, that can give you trades back into the midpoint and equal the amount that you usually take on these big trades. So for me, even though I love to think that I would be able to take that big move, and there are times when it works out, I'm not going to build my entire system, and definitely not going to measure my success or failure as a trader on a daily basis based on whether or not my trading produced a system or a result where I was short this whole time or long this whole time. Again, it's fun when it works. It's exciting, and it benefits you when it works out. And there are times when I, long here, planning on exiting most of my trade here, leave my stop and happen to catch a really nice extension. That still happens. But my primary goal is rarely, if ever, to go from one voodoo range level up 3 voodoo range levels, right? So like right now the voodoo range level is 44.25 this week on NQ. Hold on. 44.25. So with a voodoo range level of 44.25, what that means for my trading is that a 44 point move in the futures, not in my trade, because I'm rarely getting in at the bottom tick, right? I'm rarely getting this. But if I measure from the low of a rotation to the turn of that rotation, it means that the average is probably going to be around 44.25 if we're balancing. Okay? If we are not balancing, then the pullbacks are going to often be about 44.25 or 2 times 44.25. So in this case, it would be 88.50, right? So if we just measure one of these, and again, I can see that this one was right because I could see that right in the line, right? So this one went 3, 1, 2, 3. So 133.50, pretty close to 3, right? But even if they don't line up to the voodoo range levels, what you'll see is that the majority of the actual the rotations, here we'll measure this one for instance, are gonna be around those numbers. So here we have a rotation of 60, 59, 75. Is it exactly 44.25? No. But if you targeted a move of 44.25, would you do pretty good? Yeah, you would, right? And then, okay, so let's look at this back up. This one went 53.25. So again, if you assumed that it's going to turn around at 44.25 here, and you exited there, would that be a pretty good trade? I'd say so, right? And so then when we're trending, like when there's momentum, and I'm looking to exit, well, now what I'm doing is I'm waiting to see if the opposing side, right, can get any more than 44.25. So for instance here, and again, this is only trading momentum, right, which is a very, very tiny part of my trading, not what it's optimized for, but something that this is how you could do it. So if this was it, this is the high right there, 35 points. So that certainly would not get me out, right? So I'd still stay short. If I was short up here somewhere, I'd hold through this pullback. This one realistically came down to here and came up to here. 43.50. I'm okay with that. It's not 44.25. I know it's close. It's 44.25 for a reason, because it can get close. Again, if I'm longing this, hell fucking yes, I'm getting out as soon as it moves there, right? But if I'm short and I'm trying to decide, should I be covering here? Well, the first thing I'm going to ask is, have we traveled a voodoo range? Because if not, we might not be balancing. We might be literally running short down with momentum. So, if it's truly runners and my risk is paid, and it's just like, how long can I let this go, right? Like, where should I trail my stop? That kind of thinking. That's what I'm doing. So now let's look at this one, right? So we come down here to this, and we trade up to here to this one. That one is 38.50, totally fine. No reason to sell that. Comes all the way down to this, comes up to here, 62. So when it comes to here, I've been trailed out now, right? So I would be getting short up here potentially, holding through all of this, holding into the low, letting it bounce back, and once it gets to this point, I'm exiting, because now it's actually right here, right? Because from the voodoo range level to the next voodoo range level is 1 VR. One yellow line to the next. So once it touches below this or to it and comes back and breaks over this one, I know we're at least in balance, right? And now if we take that same exact spot, and we go move in, is this that same spot? Doesn't look like the same spot. I don't think it kept me in the right spot. Hold on, let me note the time here. Maybe it did. Okay, so it comes down to 11.890 and it's before noon. 11.890, it's this. Right here. Sorry about that. Here, let's turn off the profile. That's super annoying. On this time frame, you don't need it anyway. Yeah, there we go. So if I'm short from up here, right, holding through this with my runners until, was this it? No, this isn't it. There, here it is. I was like, that's not momentum. Here, if I'm holding through I'm holding through all of that with my runners. I think I moved it. Fuck. No, I didn't. Oh, I locked it. Good. Okay, so sorry about that, guys. All right, so this, I'd be holding through this with my runners because we have not traveled a voodoo range. I'm in the right day. Fuck. this, right? It was like those. Okay, so this is not a VR. This is, right? So once we make this low and we put in this next candle, basically, and we've taken out this high, you could just exit, but then you're going to exit here, right? So instead, if you waited for like that target to get hit, and then you waited for that candle to get taken out, that's okay. Or just note the voodoo range, 44.25. Take a measure from the bottom, whoops, and put a stop right there. So the stop, whoops, fuck. I've got the magnet on. The stop goes, stupid magnet, somewhere like this. It disappeared on me. But it's somewhere like that, right? And so you'd be capturing that. And that'd be a good trade. And I think a lot of people struggle because what they make a good trade like that, get a nice momentum move, hold into the low, and then they say like this could keep going, and then even if you do stop out on this candle, and then you see it go down again, a lot of us are like frustrated with this. It's like, oh man, I didn't get the whole thing, and I got chased out of the trade. No, man, like you have to be content with that, with whatever move you got here. If you follow your rules, that is a great trade. Right? Because like I said, if you needed the whole thing to make your P&L like a good day, let's say, like to pay for the times when you don't win, if you need that entire move, there's probably something wrong with your system, right? You're not giving yourself any wiggle room to your win rate's not high enough, basically, right? Or your risk reward's not big enough. One way or another, there needs to be a tweak somewhere, because I rarely will catch this whole thing. I'm just not that good at it, right? But most of my days I make more than I lose because I'm taking trades that are essentially layups. I don't need 180 points. It's nice when I get that in one trade, but that I can spread that out over, 20 trades. And if 60% of those 20 trades are winners, my day looks the same as when I hit one of these at the open and quit. But I maybe only got a piece of this, and a piece of this, and a piece of this, and then like maybe this one, right? And so in retrospect, it's like I've got more trades. Maybe I'm paying more in commissions, and I'm like active for longer. But the probability that those little 20-point moves work out are so much higher than the probability of me getting the 180-point move. And that's the important part that I was really struggling with for a long time. Because, like I said, these moves look sexy. And when you look in retrospect, you're like, why wasn't I short here? So if you catch yourself asking yourself that, why wasn't I short through this whole thing? The answer is probably because your system isn't optimized to pick these up every time. And that's probably fine as long as you are trading consistently and you have a way to do that. Okay, so anyway, total tangent, but I feel like it's important to talk about because a lot of times people confuse like good consistent trading with what basically is just like lucky shots that people share on Twitter, right? Like that's the one positive about selling this and covering it down here, the literally one positive of that is that you'll gain a lot of followers on Twitter the day you do that, right? Because people have short memories and they're not going to remember all the times when you said to sell when it was like creeping up. If again, because the only way you're catching these is if you're also selling this one and selling this one and like this one, right? So it's like but all you need is to get a couple of those, and it looks pretty awesome. Especially when they like line up perfectly like that. But I didn't take this trade, right? And I frustrated that I didn't take that trade? Yeah, but I realized in retrospect, looking over in the trade view, there's probably no way I hold past this in real life. The majority of that trade is out right here. Would I maybe have had a runner go here? Maybe, but it'd be like one or two contracts max, right? Whereas if I'm trading in this kind of action where we're getting rotations from one side to another, and that point range is like 20 plus, usually about 40 points, let's say. And so I can wait for the move to develop. I can get short, and then I can get 20 points. I can get the second half, that 20 points of the 44 rotation. I can get 20 to the downside before my target. And then as it moves around, I might not get it here, but as it comes back in, I might get here, and then I'll get 20 points back to the midpoint, right? So right there, that's like, there's my 40 points. Well, that 40 points is the same as this 40 points, right? This one might look sexier, but when you get short here, and you're like, I'm out, that was a great trade, and then it goes like this, you feel pretty shitty anyway. So if like I said, if you're going to optimize your system to catch this before this, just realize that it's harder than you think to only take this trade and not this one and this one and this one and this one. And it's even harder to hold through all of this unless you have like nuts of steel and a very, very, very strong momentum strategy, right? Okay, so let's take a look at the algo now that we've kind of watched the open. That's just the DAX open. The real London open starts in 30 minutes, but I believe we have Putin speaking soon, if not already. So we could definitely get some news related. We could get some news related moves. You'd assume that would be lower, but you can't. Taking trades, scalping trades based on like news expectations is not usually very smart. Instead, you can. What I usually do is I tell myself, I know with this upcoming event, the consensus is that we will probably trade lower, or the risk is that we will probably trade lower. So when that doesn't happen, the times that doesn't happen, I need to be aware that the majority of the participants have probably sold that market, and so you might have an inventory that's very short, or too short, right? And so those longs all of a sudden become better trades once that expectation is like no longer true, right? So if like let's say that they were afraid that I think he is actually talking. Looks like Russian Defense Minister Shoigu is talking. So this is probably where this little drop came from. But if most agree that the risk during like Putin and the Russian whatever is going to happen, whatever he's going to say, if the risk there is to the downside, then you can't just say I want to be short. You have to trade the market you get, not the fantasy in your head of what you think is going to happen. So instead, what we can say is, if the market triggers us short, then be aware that we are trading with the majority of inventory in the direction that everyone thinks it's going to go. And when I am trading in the direction that everyone thinks it's going to go, I'm generally being very nimble. I'm not expecting, unless I see volume, I'm not expecting increase in range. Now, once you see volume increase, that changes, right? Like you can just have everybody sometimes everyone is just right. Like everybody can expect something and it can exactly happen, and the market might respond to it exactly how everyone expected. That does happen. I'm not saying that we should always be contrarian, but what I'm trying to say is that the opportunity, the real good opportunity, the edge for me as a scalper, is usually not with when it's usually not very, there's not much of an edge to take when the expected is happening. Usually, the better edge is when the unexpected happens, or when everybody assumes one thing and then that thing didn't happen. That's usually where the big short term opportunities are. Sometimes those are long term opportunities too, but I'm focused on only the short term opportunities. So when it's a when I it's different if you're not sure what the expectations are, but if you know one way or another, you're pretty confident that inventory is either long or too short. Uh, that's when those big events, those news related events, that's when those news related events actually matter. Is when everybody agrees that it's gonna that the market's gonna respond one way, because once you get all that inventory going in one direction, now if that doesn't happen, if that expected result does not happen, you have basically a rush to the exits for anybody who agreed that it was going to happen. And so this is why a lot of times people say that like scalpers are quote unquote faders, right? Is that a lot of times we see them move and our first instinct is to fade that move. It's not because there's always money to be made fading. That's not actually true. Sometimes they literally, everyone was right and the market did exactly what they expect. And in that case, as a scalper, I'm probably just not going to participate. And again, like um, the the chart might look like sexy. It's like, oh, why didn't you take that short, right? Well, I mean, here it did set up, but like if it didn't, and I was expecting lower, but it didn't actually set up for me, and then I saw it go lower, I'm not going to chase it. Whereas on the other hand, if everybody expected this to go higher, right, and it doesn't trigger here, but I get one down here, you better believe I'm still looking short because I know these guys are all dropped, and I know that they were expecting higher, and we've clearly rejected them, right? So that's how I view these news events whenever we have, it doesn't matter what it is. It could be a FOMC or freaking, president, or even Putin, president of, no, is he a president, prime minister? I don't even know. President of Russia, leader of Russia, dictator of Russia. Even stuff like that. Like, it doesn't really matter to me when it comes to trading what he says. What matters to me is how was the market positioned and what did they expect the market to do in response to that event, and did that happen? Because when it doesn't happen how they expect, the opportunities for my edge as a scalper are going to be huge. Whereas when everything worked out just like everyone expected, it might set up, and in which case I can join in the crowd. But if it doesn't set up like right at that moment, and the market just starts going and rushing, I am not going to chase that ever. That way too many times I have been the very last one to decide to accept that I guess we really are going lower or whatever, and then you end up shorting the low for the breakout, like right into the capitulation, and just as they stop you out, the market reverses at least 50% of the way, and that whole time you were waiting for the knife catch or whatever. Like, I just don't play that game anymore. I'll be honest. Like, I see those big moves and I realize that they're sexy and it looks like a trade you wish you were in because it looks easy and quick and exciting, but eventually I realized that my system is not optimized to catch that kind of movement when everybody's in the same side of the market. There's just not going to be the order flow I'm looking for to trigger to signal an imbalance, because everyone's just agreeing and they're all going to just go that direction. Now, if I'm a long-term investor or something, yeah, exactly, like 100 BPS tomorrow, exactly. HS, perfect example. Like, if everybody is positioned, like if everyone assumes that like the worst, and you can see it from the positioning. Like you sell off the night before, or you sell off into the event, or right, and you can just tell the inventory is clearly heavily short, let's say, and you also know that the expectation is 75 basis points or whatever, and then there's a surprise in the opposite direction. That opportunity is going to be great for a scalper and like someone fading. But if everyone's scared about a 75 and they're short, and then we get 100 tomorrow, I'm not even going to trade. Like, most likely. Like, I doubt I'll get triggered. The market will just like rug pull. I'm not going to be short, and someone else who was more willing to risk more than I am will get paid, right? But I also won't be longing as it drops because I'm not going to fight the crowd when the crowd is right. And so if they're, like I said, what matters though, it isn't just the expectation, it's how they were positioned into the event. You got to know both. And sometimes it's not so clear. There's times, especially with like economic releases, where like I didn't even realize that, like for a while there was like housing starts coming out, like number of houses that were getting built, and like I wasn't even paying attention to that for so long, and like I'd see these huge moves from it, and they and sometimes they would just retrace the whole thing, and sometimes they would keep going, and I really didn't understand. I was like, I thought that was bad news or whatever. Why did they retrace so much? And it was only through like really thinking about this and working it out that like the reason why they retrace so bad is because literally everybody trading the macro trade expected that to happen, and they start to take profit, and then everybody who didn't realize that was going on and tried to chase it at the end all got trapped on the opposite side. So if you are going to trade with expectations and with inventory, so if inventory is short, they expect lower and we go lower. If you're going to short, you must be nimble with your exit. Even if, and then you got to be okay with that, even if you get this. Like, that's not bad trading. If you caught a piece of an expected move with like heavy inventory or whatever in the direction of wherever the inventory was going, and you caught a piece of that, lucky day is how I look at that, right? Like, it worked out. Like, sometimes luck's on your side, but I don't have an edge there. I don't have a way to hold on, is this a trade? Is this a long? This is technically a long, but there's a lot of volume here. If you're balanced still, right? We're in the zone for a long back to the open. The question is was this enough volume coming down that this is the start of an impulse move? You really wouldn't know until you get the retrace that rejects. So it's just a little bit of an aggressive long. And so the way I deal with this is I will often not take it right away because my stop would have to be about 15 points. And if I'm like right, but it doesn't really go anywhere, I'm probably not going to get very much more than 15 points. So instead what I'll do is I'll wait and see if I get a better, if this candle pulls back to here, I might go ahead and nab the long and still put my stop right here. So like rather than a 15 point stop, maybe I get an 8 point stop on it. And then when I get that 15 points, it pays for all the times when I'm just dead wrong and it's like just dying, right? Because when you see volume increasing, so this is cumulative volume here, and see how the volume is increasing on all the down waves, the gray, but it's not doing that on the up waves. The green is just like flat or lower, but the white's like boom, boom, right? So they are like firing shots to the downside. It doesn't mean that it's gonna go lower, but it means that someone's trying to push it lower. And so what you have to do is you gotta trap this guy. And there's an arrow here to remind me that guy needs to get trapped before it can go higher. So what you can do, these white lines come from that same indicator. What you can do, what I can do, is I can put, oops, there we go, some limits on this zone and say, okay, This guy's trapped. If we can develop volume up here, and if we do that and come back and test into here and they defend this zone, it's probably a pretty good long. Because shorts got heavy, they tried to trap them, develop volume up, came back, and then those shorts exited by buying. So for instance, if we hold 11,890.75 now, like you could probably long it. But the problem is we haven't developed any volume up here yet. But if this closes here, I mean, there's just not a lot of volume here. It's really, Globex is tricky because, you know, this volume might be like 3 times as much as average and you can't even visually see it. But I'm gonna go off of what like my experience is and my eye. And I'd say that that's just not very impressive volume. Not to mention it might not even close at the high. But if it did, I would want to see some sort of extension of this. It needs to get bigger and bigger. Like this one, like that's exceptional volume. That if it looked like that, I would say we've established volume above. But keep in mind, you can't just buy that because then they could trap them, right? So what you have to see them do that, and then you have to see them try to take it lower and actually bounce it. So are you going to get long at the low? No, I'm not going to be able to get long at the low. But am I going to be way more confident that it's going up? Yeah. And I'm not going to like just get totally steamrolled every time. So let's see if this sets up, and if not, I'm going to go grab a water so my throat doesn't get tired. I talk too much. But yeah, if you guys have questions, feel free to ask, especially if we're just kind of waiting for something to happen. Right now, the only way this can be a long is if we close here, I see buy volume come in, and then we retrace. Actually, let me go grab that water, because now that I think about it, it's probably not going to happen very fast. It's Globex. Normally, I'd expect that to happen in about 10 seconds, but with Globex, I don't think I'm going to miss anything. Even if they close it, they're not going to, if I'm right, and they're going to bounce, they're not going to do it fast. So I'll come back in 30 seconds. All right. As expected, they just don't even close the top. Now, if we think it's bearish here, and again, I don't have really any reason to think it's bearish either, we would be looking for sells up here. Generally, my sell should interact with this blue line, and my buy should interact with this blue line. That only changes when this channel, these lines going sideways here, if that starts to drop significantly at like a 45-degree angle or rise significantly at a 45-degree angle, that changes. But assuming that those are relatively flat, which they clearly are here, then my long should be coming down here and my shorts should be coming up here. And that's why they're there. They're just a guide, what we call a radar, kind of like when you're flying a plane, so you know like whether or not you're going into a storm or not. You don't want to be longing up here, really ever. Because your stop's going to get hit and then it's going to go the direction you want. So instead you want to, if in that case, if you thought this was long, and I'm not saying it's not, right? In fact, like it technically triggered here. I just wanted to be conservative. But if I think it's long, I can't just chase it here. But I can say, hey, look, here we go. They're putting in some volume, right? Like that's significant. So rather than just buying, what I want to see now is see them try to take it. And if I had FOMO'd in here, where'd my stop be, right? Well, probably somewhere under this one or under this one or maybe down here. Okay, I want to see price go back there and not fall any further. Like steal the stop of all of the retail traders who chased, and then do they suddenly return back up? Now I'm happily going to buy up here. And I would rather be a buyer at this price after that bounce than a buyer at this price before it. Right? Because it looks good in retrospect, but how consistent this occurs based on just that one signal is not high enough for me. I want the 60 to 70% win rate. I don't want the 30 to 50% win rate. And that's just because you can. I'm not saying you can't be profitable with the 50% win rate. You can, but you have to be a really good decision maker. If your win rate is under 50%, you have to be a really good decision maker, and you have to be really good at managing risk. And those are two things that I am decent at, but not an expert, right? So I would rather wait for what I call the layup, right? The easy shot that I know is going to work often, and potentially miss the aggressive trade that I'm pretty sure will work a lot, but I'm not sure if this is the time it'll work, or maybe it'll be the next time, or maybe the third time, or the fourth time, right? If that's the case, even though it looks bullish, I'm gonna wait for that pullback and say, okay, now that I know that longs are defending this level, let's see if when we pull back they're still interested. If they are, most of the time we're gonna at least come back to this level anyway. Because think about it, if you had long tier, are you exiting here? Like, is that your whole move? Or are you thinking it's probably going to go higher? Well, if you think it's probably going to go higher, then there's a lot of times when it's going to pull back and you're going to be sweating as it comes close to your stop. And if you took some profit and raised your stop to break even, you're going to get trailed out a shit ton of times before it runs, right? So I would rather, like I said, if this by itself is only going to work 50% of the time, I will just skip that, right? I miss out on these 15 points. And sometimes I miss out on 50, right? But if it then pulls back and bounces like how I want it to, and I then have a 60+% win rate, then I'm at least going to come back to this 1-to-1 risk reward point, and sometimes it's going to go 50 points anyway. Yeah, I'll take the higher odds trade things and just skip this one, right? Like, am I always that conservative? No. But if I have any doubt, basically, that my direction or location is ideal, I am, especially with NASDAQ, but even with the S, it rotates so often that the idea that I'm not going to get another entry inside of this zone, it's most of the time you will. You might not get it down here, but I didn't know this signal hit until 11,898, right? So anywhere in here is actually a better trade, risk to reward wise, than taking this first one. Again, unless you're getting all out here and you're just done with the trade, or you never trail your stop and you're always going to leave your stop down here, then sometimes you're going to get out, most of it is 15, and sometimes you're going to miss that 15 exit and you're going to fail, and sometimes it's just going to fail. And when you put all those together, your true win rate decreases, because sometimes it just fails. Other times it gets close but doesn't quite make it and then fails. And the times you do really good, it goes, pulls back and bounces, or just runs, right? So 50% of those conditions you make money. 50% of those conditions you actually lose money. And so the times that you make money would have to be way bigger moves. And I don't see bulls having clear control yet at this point. So there's a lot of times where it's just going to come up here and then reverse and drop right through that stop. So if I did, like I said, the back test, like I said before, the back test might show that it's got a pretty good win rate. But in reality, if you end up exiting all your points, all your contracts here, and missing all the times it goes 100 points, or you never exit here at all, and you take all the stops but it never goes 50 points or whatever, like, you have to think about the fact that, like, the backtest doesn't make those decisions like willy-nilly, and you tell it to do something and it does it. So, like, is it going to be 50% of the time that you take profits, 100% of the time you take profits? Like, that all has to be figured in, and then you have to consider your win rate, and consider the fact that while your MFE might be 100 points,
most of your contracts are probably off at 15 or 20. And so if in addition that first trade only makes it to 20 points 50% of the time, well, you're risking 15 to get 20 50% of the time. And then like 10% of those, it goes 50. But you've already taken profit, not even halfway there, right? So you can't just say, like, oh, that's a 4-to-1 risk reward. It's like, no, it's really not, because if you're getting out of your trades most of your contracts here, like, then whatever it goes beyond that, like, it's only a portion of the reward that the backtest would tell you. The backtest will just show you what the MFE is, right? It'll assume you did it perfectly. But in reality, how many of us actually like make decisions perfectly based on conditions? I know I don't. I'm distracted. I'm nervous or excited or feeling FOMO or maybe just like misinterpreting things, bored and deciding to experiment with new ideas. Like the computer doesn't do any, the algo doesn't do any of that, right? So when you tell it to backtest and say, how often does this work? It's not taking any of that shit into account. It's saying, if you traded this absolutely perfectly, this is how your P&L would look. And so then you have to ask yourself, is it realistic that I trade that perfectly the times it does work? Because if it only works 50% of the time plus 20% of the times that it works, you fuck it up anyway because it's a hard trade to execute. Guess what? You're probably losing, right, with that trade setup. So it really, if you guys haven't done an actual objective backtest, I do recommend doing it. But once you do, then go back and actually compare it to your individual performance and say, like, am I getting anywhere near what the backtest says I should? Because that's really important to show you whether or not you are trading a style that actually fits like your comfort level. All right, so right around here is where we want to see if it bounces. This is the area. If it's bullish, it will defend this. If it's not bullish, it will not. So, and like I said, had I gotten long, I'd just have to hold here and hope. Let's just see where the volume is on the drop. Way at the bottom. Okay. We did get volume above that. So yeah, as long as we get a signal down here to go long, I can buy it. And I will buy it with 2 contracts. Meaning 2 NQ contracts. Oh, what the hell? Session expired. Fuck you guys. Shit. Let me get back in. What the hell? Hold on. Broker just shit its pants. Apparently I didn't take a trade for long enough. Okay. Let's see here. Enable. Okay, here we go. I don't have ES set up. That's okay. This is going to be 2. Stop 56. 2 contracts. And set defaults. Not 4. 2. There we go. Okay. Ready. Fuck. That would have sucked. Wait all that time. Get everything worked out. Go to the broker. Click the button. And it says, sorry, you're not logged in. So again, I do need an actual defense here. I need to see an aggressive move by the bulls that shows that they actually want to hold this. They can go lower than the low. They can test below it, but we have to defend it. In other words, we have to respond. We have to see buyers respond there for me to have any interest in buying this level. And so right now, our Renko bar wouldn't close in the 24 tick unless we hit 904 before 88.575. So if that happens here and we get a signal, I will go long immediately. If we don't get a signal and we close long, I might have to immediately exit. Or if we just go lower, I won't even get in the trade. So here I'm not even, nothing happens. I'm just not even triggered to the trade. So this one now can trigger at 98. But again, it needs a signal for me to hold on to that trade. And honestly, at this point, I want it to go lower because it's gotten so close to that low. That usually there's liquidity down there. You'd prefer they go get that first before triggering you in. That star would be the downside. It's below. That's not what I'm looking for. That purple in the background is not a good sign. So far, there is nothing indicating that it's going to trigger me in, so I wait. This is not enough bullish action at this point. We actually have to see the algo fire. And that's not going to happen, like I said, in this case, until 11.898. When it closes, then I know for sure. You'll see like signals disappear for now because it hasn't closed yet. Once it closed, it's done. And it won't change anymore. There we go. There we go. Okay, got it. So now my stop, you guys, goes up down here to the, what the hell? My stop goes down here at like a point or two below the low. So we'll do, we'll just go with 80 to 25. And now I will go ahead and take profit at, where is it? 0750, right up here at that volume build. At least 0925. I need to take profit before that. But I generally try to get about 10 points on my first trail, my core, right? That first one. And then I'll let the runner run a little bit, but I want to get paid when I'm right. So I am long. As long as I get that 07 fill, which I don't know if I will, but as long as I get that, then the trade is in good shape because I'd only be risking like half of an entry, but it needs to go a little higher, otherwise it will stop me. Looks like they're gonna stop me. Let's see. And if they stop me, they stop me. Like it doesn't always work. In this case, if they came right back in, I could technically try it again. Sometimes it does take 2 or even 3 tries. I probably wouldn't try it a third time in this condition. These aren't perfect conditions. It does look like they're going to stop me, though. Shitty. They'd have to save it right here.
Order canceled.
Nope. All right. They got me. So the cancels are the targets. So now we got to see if they trap back in. No, they can't. They closed a candle below the signal. So we will wait and see. I'm going to assume this is going lower for now, or else I just got fucked because it was London Open, which is unfortunate. Sometimes the timing is just not great. Yeah, because if it jumps back up, and signals again, I can technically take it a second time, but I just realized now that signal triggered exactly at London Open, and like order flow is significantly different when you have different participants. So I may have been better off not taking that with full size in retrospect, seeing that it was London Open. It makes sense that they would go just a little bit lower before ripping back up to make sure that they stop all those old participants out. And you can see that it was like 2 ticks above the previous low. And so those will often get stopped, which is why I would have preferred that it got lower first. But like I said, I didn't look at the clock and see that it was exactly London Open when that hit. Otherwise, I might have actually skipped that one. And then I would have taken this one if it triggers. But at this point, I'm not confident enough to take the trade again because that looked like a pretty good trap on the opposite side. If you look, all the volume here was up here, right? They put in this volume that we talked about, and you'd think that then they back it out and then they rip through it if they were bullish. But when that volume now acts as resistance, we're going to assume, or I'm going to assume anyway, that I'm just wrong about that level, and that for now, bears are in control of that, even though they let them trade it up there right before London. Clearly, when they got there after London, there were sellers waiting there for us, right? So it It's frustrating a little bit because I literally missed my exit by 2 points, and on NQ, like, that's not very much movement, but this is one of the reasons why it's really not a great idea to trade during the open, like into an open, because even when you're right about the direction, if you will, like in that sense, like they traded up first, but the like all that extra volume ends up, like, what if you have measurements of how far you expect trades to go, it's not going to apply to like the first 6 or 7 minutes of an open. It's like that's a whole different ballpark. That environment is not normal. Unfortunately, we did not get triggered on the short side. There's no trigger there. It's just pink bar, purple bar. That's usually a pretty good pivot point. It's not an entry. So that beeping just says that I should be watching, if I think it's balanced, that I should be watching for buys. But I'm not knife catching against momentum. And this is now looking like momentum. You can see that we do have volume decreasing at the moment, but that could change very quickly. But this inability to get price above the midpoint of this channel here is a clear sign that bears are getting in control. That channel is going to start turning down unless they can trade all the way back up to the top of it now. And if they do trade back up at the top of it, this is actually the point where you'd want to take short. What I will not do, though, is take the short down here under the radar. That is something I cannot do. If I did that, I would be tilting. This is not the location for a short. A short would have to come up here. Now that we've gotten under this arrow, I can. It's not all that unusual to see it come up here and go lower. That's actually pretty common with those. Yeah, those are identifying potential pivot points, basically. And so those pivots often last for a while. And you can see that it did produce a pivot. That pivot just ran, and that's what, so the signal's fine. It just ran into a brick wall of sellers, right? It's nothing works 100% of the time. And that trade actually works a lot, especially waiting for the pullback like that. I would have, like I said, I would have preferred if it traded under the first one by just a couple ticks. The fact that it didn't is just kind of unfortunate, but because it just doesn't always work. It doesn't work as often, I should say. So I'm not looking for a long here yet. I don't have any evidence that this is balanced. We need location to be correct and conditions to be correct, and then we need the algo to fire. All those three things need to happen before I can trigger into a trade. And right now, the location is so-so, but the conditions are not there for long. So even if the algo tells me that there's order flow that looks strong to the long side, I would not be a buyer. It doesn't mean the market's going to go lower, though. Okay, so normally that purple bar, green bar with the arrow would be a pretty decent long if we were in balance. So it'll be interesting to see if that does end up extending, but we're not going to take it because the conditions, like I said, the location, it's okay. The conditions do not look ideal for trading balance here, in my opinion. Shorts have longs trapped, and generally that means that whatever was old support is not going to be old resistance. So it doesn't mean it can't work, but the algo is focused on the the footprint, right? All the information from the time and sales and the order book and all that. And so it's not like these signals, these colors and arrows and all this stuff, like those are still going to show up and look like a long signal even when we are clearly going lower. and it's up to me to have discretion. Like the algo is basically saying, hey, if this is a spot you want to be long and everything looks good, like, and the longs look like they're in control, this is the potential turning point. What it's not going to show me is which turning point is going to be the low, right? So you can't just buy every time it turns green. I wish it worked like that, but that's not the way it works. You have to also think about the fact that you have like a higher time frames, and you know that these guys up here all thought they had the long too, and so when they get beat, one little long signal here is not enough to overcome that old support and resistance most of the time. You're going to need these guys. You're going to need somebody to succeed to the upside before I will trust that we're going to get expansion to the upside. And instead, what I'm going to assume is that tests up here are going to be sold. And so if I get a sell signal up there, I will be happy to short it as long as these conditions continue to exist. But I still need the algo to tell me to do that too. So these triangles that are red or the arrows that are red are generally pretty good spots to follow through. So like if you identify this as bearish, like this would be a good sell and this would be a good sell, right? Yeah, generally. But that only works if it's trending. If it's going sideways and you start taking those, like here, you're gonna get your stop swept and then you have to get back in again. So it's not foolproof. You do need to know how to read a market. You need to know whether or not you want to be long or short. But what it does help me with a ton is I know right away if I'm tilting. Because if I'm tilting, I'm taking trades even though the algo isn't telling me to, or I'm taking every single trade that the algo is triggering, rather than actually going through the process of thinking about, is this an area I want to be long or short? Is this an area I want to be trading at all? Is there clearly momentum in one direction or another? You gotta do that first. And no, these are the areas I want to long, these are the areas I want to short, these are the areas I want to totally avoid. And then here's what I need to see to think otherwise. And then go in and now wait for those execution signals upon confirmation of those areas. And so you're going to have a lot of these that, like, it'll look like they quote unquote worked, right? Like the market moves in the direction the algo told you to go. And at first it's like, it's frustrating because it's like, oh man, I could have had that move. And it's like, yeah, but like, how often if these conditions are exactly the same, how often is that actually going to work in those conditions? Like well, what I'll tell you it'll usually do is get back to this support, right? It'll usually be a turning point, but this support will usually hold as resistance as long as bears are in control. So if all you need is this to this, well then sure, go ahead and buy them all, but realize that you're going to have to put your stop down here because sometimes they're going to retrace, right? Although I have seen some people very successfully not buy this, but once they get the signal, if they get the retrace, they'll buy this, put their stop down here, and then sell it right here. And I mean, you know, it's creative, not my style. I'm a scalper, but I'm not looking for 6 points in NQ. You know, I need at least 10, preferably 20. But yeah, if you can take an 8-point stop and consistently get these 6 points back, I don't see anything wrong with that. But just realize that when it just rockets, you're going to miss it, right? Or you're going to get stopped out a lot when you don't exit after 7 or 8 points, whatever that white line is. But yeah, what usually happens is they close this one, they try to close another one, and then get rejected. So we'll see if that happens. But you can see with the algo does identify like these turns, right? Like you can see it. That it's obviously looking at something important, but what it's not able to do, just because it would really take a lot of programming, is to tell you whether or not you want to pay attention to that signal or not. And so there's a learning curve, not only of learning what the signals mean and when to use them, but also like when to ignore the signals. And that, like I said, is actually based on personal preference. because there are some people in the room that I trade in that will literally take every one of these, and they're okay with the fact that they're going to get a small win here, a loss here, and potentially a small win here. Like they come out ahead and they're happy with that, and that's fine. You just have to be okay taking the stop and jumping right back in with the most aggressive trade. It did trigger, you know. It's not invalid. It's just not the kind of trade I usually take. I don't mind buying it down here, but what I prefer is to see them do something with this, turn this back into balance or bullish, and then buy the next trigger. That's how I usually trade. Is I will wait until someone else makes all the mistakes and takes the three throws, and once we have a lead, I can just take the layup, right? Once I know who's in control, because this is a game where you can literally join any side at any time. So like, why join the side that can't score any points until they start scoring points? Once they start scoring points, like rather than getting frustrated that you're missing out, like just ask yourself whether or not that you think that kind of action is going to continue, and then where are all the people who were worried about missing out? Where are they putting their stops? Well, if people who didn't take this are now FOMOing in here, their stops are going down here, or maybe under this white line. So if I want to be long this, that's probably a pretty good. That's probably a pretty good spot to be looking for signals. A little embarrassing taking the one that doesn't work and missing the one that does, but that's just the way it goes. That's just the way it goes. You can see on the candle chart, we did have a midpoint between two voodoo ranges here. But like I said, I thought this low would hold here, and I thought we would get potentially another push down. You never know though. They can literally turn it anywhere. But it is good to see that this signal's working, even though I didn't take it. It's like, okay, at least I know something's working here. Whenever it's purple in the background, it basically means don't long unless it goes away. So this is my first opportunity to even think about a long. And see how this is now turned purple? So that's to keep me away from chasing. Because this is probably going to pull back. That's basically what that's saying. Is that it's actually like, if you were trying to buy this when it started to go up, it's warning me, look, this move is probably not over. They have not capitulated yet or slowed down at all. And so when you see it on the up moves like this, it's usually a sign that they are trying really hard, but probably not going to succeed. It's not necessarily a sell signal. It's just a be cautious with longs here. You know, like, even if there was a setup in here, I wouldn't take it. This is the very first setup I could take with the rules. Like I said, I just skipped it because I thought it was a little bit risky. But it is in the right location. It's underneath the blue line. I got the pattern I wanted, right? I just saw the volume here increasing and figured that it's not going to go anywhere. But we actually got to that target that I wanted over here, 09. And that is definitely irritating because we literally missed it, like I said, by like 4 points here. And NQ 4 points is not a lot. And so what they did is they took my stop and then everyone else's. They got everybody to get short, and then they came back up and hit that target that I had before. It's like, okay, I see. And that's just the way it goes. That is futures for you. Just because you have even if you're a really good chartist and you're great at finding targets, you're not going to know if they're going to hit that one this time or next time or the third time. You're not going to know. There's always an unknown factor. This is a higher time frame, so I occasionally will watch here for signs of control. And you can see here the radar is pretty flat. And this purple followed by pink here and red followed by green is generally a sign of like agreement that this area is like fair value. So usually what you'll get is they'll move away in one way direction or another, come back into it and pivot off of it. So either get higher, come back into it and bounce, come lower, come back into it and drop. That's usually what that pattern means. We see it right here too. And so you'd expect this area to become a pivot once we know who's in control. And knowing that, if we see it go higher and then pull back and bounce and give a signal, it's pretty, it's aggressive, but it usually works. It's only going to work if it has momentum, though, because if it's balanced, if you're in a balanced market, you want to be getting long under this blue line and only short above this blue line. So you'd have to really think it's going a lot higher to take a long up here, or wait until the radar moves its way up there, and like 30 minutes from now, it might be the perfect location. But that is basically based on like average true range, standard deviation, stuff like that. So it's just to show that like if we're balanced, most of the trading is gonna go like this, right? And so if you want to trade the edges, because that's how you trade balance, well then you short up here and you long down here. But I need the algo to tell me to do that. I can't just short it as it rises. I need the algo to signal like I see a short, an aggressive seller on the footprint or on the DOM. And so if I get the signal, I can take the short. I can't just short on location. Even if I have some tip that the market's not going any higher than 11,900 or whatever, like I can't just short the location anymore. I used to do that, and I've lost a lot of money doing that. So I needed to find a more precise way. There's really not a way that I can. Technically, if it's a star, I could short it, couldn't I? Hold on, let me see where is all the volume. Okay, so this is not ideal for shorts. Yeah, so we would need short to get short and to continue lower. We have to believe that the bears are going to establish volume down here and be able to do that. That's basically what we have to believe is possible. We don't want to, because the volume builds are so close to the lows, they are, the potential for them to get trapped down there is higher, right? And so, in other words, again, we have to ask, do we really think it's balance? And do we really think is there momentum or not, basically? And like I said, there's a couple ways to see that, but you can usually see it on the chart. But if you really think it's balance, then you have to look back and say, well, where would that change? Right? So you'd look back here and you'd find the resistance point. So I'd say here, right? If we trade above that and hold it, it's probably not bearish anymore. And the whatever momentum they had is probably done. Wow, is this trade I skipped going to be like a monster now? That's great. But what I like better, if I see them move up here and hold this, right, and then pull back later and bounce, I like the long here better. Because in that case, what we're seeing is longs defending above where all the volume is. If you're going to try to short this, you have to think that the momentum is so strong that we're going to get all the way through all of these trapped shorts. And again, that'll happen if it's balance. It will not happen if there's momentum. So, yeah, it is a judgment call. So had I taken this, I would have been out most of my trade right into this move here, and then I would hold runners until I saw some kind of sign of weakness. Unless they broke above here, then I would actually go back to using the voodoo range levels and say that I would want to hold as long as they are holding above this, basically. I guess I could hold a little further than that. See, this low is at a midpoint between two voodoo range levels. So technically, if they did give this away, it could still be a natural rotation. What I could not see at that point would be this low getting taken out. If that happened, it's obviously not bullish, right? So, in other words, in this case, because we didn't bounce off of a level, but instead off of between a level, I wouldn't really be able to trail my stop yet on those runners until we got over the midpoint here, which is right where all this resistance is, and which they are trying to break right now. So they went right through this pivot, which is pretty unusual. They backed into it like on a shorter time frame and trying to push above it. I personally did not expect this move, and I am not good at catching these V's. This, I'm never. If you see this, I am not long. And if you see this, I am probably not short, right? And I'm okay with that, because I'm also not going to catch knives when it's not a good idea. So those V's are just not for me. If you can catch them, good for you. I don't try. I would much rather take the high odds trade that usually develops after this, right? Because now we have range expansion. Look, this move up is bigger than this move down, and look how volume is increasing to the downside and the upside. There's a good chance that the next move, either down or else after a pullback, the next move up is actually a really big move. So it's not like the only opportunity to make money is here, right? And again, it's a little frustrating that it actually signaled there. Had I not bought this, I might have decided to take that. And I'll have to review that and decide whether or not that was a good idea to skip it. But generally, I will wait for the retest into this zone. It literally just did not give me it. And that, sometimes they just be it. This would be a chase. Is what that would be. That would be a chase. But if they come back in here and like bounce off of this and then trigger back along again, I could take it. And again, not because I think it's going to go 100 points from there, but because I think getting this 20 is easier than this 20. That's really all it comes down to. Is that you're gonna try to get this 20 over and over again if you're trying to be first. But once they've done it, if they pull back, getting that 20 a second time, way easier than you think. And like I said, that's why I took this one. Because I thought that this would be easily retraced, right? And nope, not that time. They had to take all our stops and then trigger back in again. And the sad thing is had this signal happened here, right, and the purple disappeared, I would have been okay taking the long, right in the right place. But the fact that it got so far below this low and actually put in volume down here, I'm just assuming that as soon as it comes back to that old support, it's going to be new resistance. Not because it always is, but because it often is. And with that rule in mind, I'm going to avoid a ton of stops. But I also miss these. And like I said, I know people in the room I trade with, they get so tilted from missing these moves that they just find a way to take every single one of them. Right? Even if it means taking 3 or 4 stops in a row sometimes, they can handle that, but they can't handle missing 50 to 100 point moves. And like, more power to you if that's you. You know, I can take the stop and then come back and get the easy layup. I'll take those 20 points all day long over and over and over again. Like, this would make me nervous as fuck, and I probably wouldn't hold it. You know, I'd be like super nervous here, like totally de-risking here. I'd be down to like 1 contract, and the moment I saw a down bar, I'd be out. Whereas like, if we get the pullback, easy hold. So it just depends on how you see the market, right? Some people can't hold the pullback. Some people see this and they're like, oh, like this one's gonna get trapped, and they were right? But like, I see it opposite than that. I see whatever we just did, that area is gonna be way easier to trade through now. And so if we're bullish, it's gonna rock it. This time it just waited, you know, it just had to go 1 more lower, and then it did just that, right? Now there's a chance that because this didn't fill and this one broke through the old support and resistance, and didn't reject, that it actually makes it more likely that this is going to be a big move here. So while I can't take this, what I'm trying to say is, had we seen a pullback here, from this, oops, if we saw the pullback, come on, oh my god, if we saw the pullback here and then a bounce here, I'm totally cool with buying that, right? Because they've established some buy interest here. But just buying it off the bottom, even if the algo says there's buyers, there are too many times where I've seen this get hit right here and just reject. But I think a big reason why this one didn't work is because I took it during London Open. Within literally the first 2 minutes of London Open, I just wasn't watching the clock. And so London Open basically was the reason this triggered. This whole move here is London Open. That's just the rotation that London Open produced. And honestly, this too. All of this whole move up and then the sweep. The reason we got that was because of London Open. All those new participants rebalancing, and then finally once they were done selling, everyone's like, okay, done selling, now we'll go back and do what we meant to do here before all you new participants came in and sold it, right? So had we not had London Open here, I don't get long because they don't trigger it, and instead it just peters out down here, does a little bit selling, and then I get long. But because we got this one, right, it looked like they were rejecting, and at that point I got the purple and I was like, nope, it's bearish. But notice I did mention we are not going to short this low, right? I knew better than that. Even though it looked bearish, there was no way I was going to short that. Okay, now can we short this? We've broken through some power bars. These little red lines that are attached to these flags are power bars. When you break them, and there was another one here, when you break them and print bars going down or up that are not pink or purple, in other words, they actually have some aggression, because the pink or purple is just, it's signaling that price is moving, but people are just pulling orders on the order book. So someone's hitting market buy, for instance, here at 11,914, and the guy who was still sitting at 11,914.25 pulled his order, and so the guy who hit market at 94 or 14.25 actually got filled at 14.50, right? And so the algo's picking up on that and saying, hey, people are buying frantically here, and they're to the point where people are actually pulling their orders because they're afraid to sell. And you'd think that's bearish or bullish, and it is if it's in the right spot, like if there wasn't resistance right here, or if it's at the lows, like this, right, is usually a good sign. It's like everyone just quit selling. Well, they quit selling because it was London Open. But when it's way up here, after an extension like this, it's usually a sign that capitulation's coming. It's not a sell signal, but it's basically a sign that if I get a pattern that I can trade, that having a pink bar up here, either at the very top or two from the top, it'll help the market move more easily, because those traders that marketed in long here and saw this extension are at risk to get trapped. Because again, the only reason that the price went up here isn't because there wasn't more interest by buyers. There was just less interest by sellers, right? The order book it looked like a lot of sellers, and suddenly they were like, never mind, I'm not going to sell here. Well, if then sellers come and sell, that's a change in character, right? And so you usually trade through this bar relatively easily. Not just the first time, but the second time too. So this diamond here is just telling me that there's a shit ton of volume on this compared to what you'd expect, which is, again, not a sell signal by itself, but often a sign that that is the line in the sand, and that if we're going to get selling, it basically has to happen here, because all the volume is at the top. It's basically a P per ear. This will look like a P profile. I'm gonna have to redraw this. What we should see. Oh, I guess I would have had to include this one. So we won't know until they continue higher. But if they continue higher here, we're going to see this POC shift. If they don't continue higher, you won't notice it because that means sellers came in. But if this is green, then these are going to turn green, and then we can extend this, and this will shift higher, which basically makes there. So now see these are green, right? It's the only thing that repaints here. And generally what's going to happen now is the POC is going to start shifting higher, which is bullish on the short term. Hasn't done it yet. They see all that volume up there? That's what it's triggering. I guess there's just more of it down here. Visually, it looks like the POC's up here, but Sierra Chart's telling me it's down here. I don't know if I trust that. I mean, I guess I should, but I guess maybe because there's so much down here too that it's just kind of averaging it out. Interesting. That's not how it's supposed to work, though. It's supposed to be the point with the most volume. I can't quite see it, but it looks like it ends here, and this one clearly comes all the way out. I don't know if you can see that. But to me, that looks like the volume point of control here. I don't know. Call me crazy. I can't quite see. Maybe it does go a little further. Oh, right here. This candle here, this bar here, might have had a spike. There's not really a delta spike there, so it's not like and it's not at resistance. It's not like people had their stops there, so I'm not totally sure, honestly, why the PLC's in the middle. I really feel like it should be up here, but if we can get it up there, and then they trigger short, it's actually a really good short. But the back test is based on the POC of Zero Chart, so I'm not just going to say that I can visually see it so I can make an exception. No, I'm gonna do what I'm supposed to do. This guy, little diamonds inside here and here, is a sign that you have quick moving price, despite the fact that we're fighting volume. So it has to be both. Not only is price moving fast, but price is moving fast, and there's recently a lot of volume in the relative volume is high. And so if you think about it, price moving fast when there's not really any volume doesn't really tell us anything, right? If there hasn't been any volume traded and like price just like wiggles around, like that's just illiquidity. That's not momentum necessarily. When you have volume going the opposite direction, like here too, or here, when you have volume going the opposite direction, and then you get that quick spike back up to recover all the price range, that is potentially a momentum shift. The trouble is you have to be aware of where we are on the chart. So like here, we were down at the bottom of this radar, so that became a pretty good long. Up here, we're at the very top of the radar, so it doesn't mean it can't go higher. It just means that the level of, basically, you need more and more energy to keep price rising the higher you go. So while it's that's a sign we should not short, so that's interesting. If it closes with the pink, we should not be short. Then it's suggesting we are in trend up. But yeah, with this up here, it doesn't mean it has to fail, but it means that for it to keep going, it basically needs to either push just as fast, right, for the next couple candles, or push with more volume to take out sellers and continue that momentum higher. Otherwise, what's going to happen is we're going to chop here and then roll over. So these are very easy to trap. See how here, once we got under it, that retest is generally the start of a new rotation. Now this rotation was very small because it was letting open, but I could go find another one where if you can get beyond these and retest and find resistance where there used to be support, you can get pretty good shorts set up here. You just have to have the right location. Here, so this one was actually one too. These lined up beautifully. So this area is clearly important. I got that arrow there too, here. and then this area is clearly important down here, which basically means this whole zone down here was like a pivotal spot. I will be right back. Let me grab another water.
It is getting a little bit late here, so I'm gonna need to. Well, let me see. Let's see if we get a trade here. But if we don't, what I'm gonna do is start my nighttime routine with some indica, and probably be done trading. But let's just see if we can get a trade right now. That'd work. So, like I said, this is the area where I really want to target. I don't like having the POC down here on this wave up. That is not ideal for shorts. It suggests that shorts are actually trapped down there, but it's so far away that I can probably get a scalp back to it so I can target that area. We don't really have any short momentum here, so I do need to actually break that low and then get a signal and a retest. There's no algo on that. That orange on the top is just it's a sign of the orange stair step here is a sign of divergence, which is not enough for me to take a trade. There's a lot of people who successfully trade divergence alone, and that's fine. If it works for you, that's cool. And it's not something I use to like as a trigger for a trade. But what I will use the divergence for is if I was suspicious whether or not this was actually if it was possible to beat this move, the divergence will push me over the edge to go ahead and take the trade, but it has to actually signal as a valid trade entry, and the location has to be right and all of that. But if I'm like, it's like it helps me sway my opinion. But you'll see that it does not always exist, right? You don't always get it at every low and high, and then sometimes you get them like in the middle, and it's not, I guess technically it worked if you just long that, but it doesn't really make sense. It's not at a pivot. So like I'm not a huge fan of this. It's all I'm using is just the Sierra chart standard like divergence detector. I don't love the tool. Let's just say it that way. But visually, I do see the divergences on some of these indicators, and that I will trust a little bit more because I can actually visually see it. But these are mostly for just seeing where we are in the rotation. Like I don't want to be longing when we're up here going down, right? And it's basically acting the same way as these lines are here. It's to protect me from taking really, really dumb trades. And I wish I could say that I just know better, but having that visual confirmation that like here, that like if I shorted right now, it's probably not so smart, right? Whereas if I shorted back up here, it might work. What I really want to do here is I need to wait for it to retrace back up again. So even though it looks like the price might be right, like the timing, like the cadence is not quite accurate. I'm not saying it can't go lower, but we don't have that natural in the natural rotation. We have not made that upswing that I'd want, that retrace. And because the way I trade, I don't trade breakouts, right? I'm not looking for increases in momentum so I can sell just as everybody's getting their stop hit. That's just not the way I trade. I generally will trade after that upon a retest to get better risk reward. And this helps me know if I am in the process of a retest or if this would be more of a momentum trade. Because, for instance, like shorting down here, you could see is probably not a very good idea. You've basically flatlined down there. Whereas if you can move up and then roll over, maybe you could sell up here. But the problem is, see this orange one? It's rising here.
which means if these are rising, the orange is rising, but the other ones are falling, it's usually a sign you're actually balanced. Like you're not bearish. The orange one's a longer time frame. These are actually all derivatives of moving average rate of change. They're not like stochastics, but they work just like stochastics. So if you know how to read like RSI and stochastics and MACD and all that stuff, I'm using it in the exact same way. I'm just building it with rate of change of different like volume weighted and Hull moving averages of different lengths and of different derivatives. So like the rate of the rate of change or the rate of the rate of the rate of change, things like that. So like multiple derivatives of the same measurement. And the reason for that, if you're curious, is when you measure a moving average itself, you're getting a lagging indicator, right? The moving average it prints when the bar closes, and then as it's moving as the bar closes, but it's obviously not going to move very much. So for instance, if you are waiting for a moving average cross, let's say, you would have, like, let's say this isn't a moving average, but it can work the same way. The yellow line is the point of control of each bar. So let's say you were waiting for the point of control to like cross the mid of the channel, right? Like that does happen here, right? But you don't know that happened until the close here, and really even at that point, it didn't quite hit it, right? It was like here, and so you really don't know until here. So it's, and by that point it's way up here, right? So if you're moving at, what I'm trying to say is if your moving average is too short, by the time you get the signal and it's confirmed, you've already moved quite a bit, and so instead of waiting for a moving average to reach a certain point, like a cross, or for price to meet the moving average and cross it, instead what I'm measuring here is what's the angle or the pitch of the moving average, and how much is that accelerating or decelerating, because that, if you look at just the angle of this, it clearly changed here, right? See how this is like a more than 45-degree angle, and if anything it almost gets like near exponential for a moment, and then it starts to kind of settle in here. So that is, you can see it spike there, and then the longer ones are still the longer time frame. They're the derivatives with longer lengths are taking longer to respond because they're going to lag more, right? And the orange one is even further lagging, right? And then the pink one is also another one of those, and so is the green. So all of those are different periods or derivatives of the derivative. So like the blue line, I believe it is the angle, and the green line is the derivative of that angle, right? But on a higher length. So in other words, what needs to happen for this line to move is for this blue line to increase its pitch. So, but again, it's lagging, right? So you can see that as the blue line falls, you don't see anything happen here at first, right? It just starts to slow down the green line. The green line doesn't actually turn till here. Well, at that point, the blue line's flatlined, right? So the green line by itself, it's too late to use as a trigger to like sell. But if you use the blue line alone, I mean, in this case it works, but you can't do it here, and you certainly wouldn't get much here, right? Even if you waited for it to drop, this wouldn't be a very good space to short it. So the way around that, rather than just like ditching the whole program because it's lagging, instead what I'm doing is I'm not comparing when price is moving past the moving average or when the moving average is crossing a certain point, like another moving average. Instead, I'm saying, is that moving average moving, and how fast is it moving? And then how fast is that line changing, right? And so what you end up getting is these oscillations, And all I need to do is look and say, are they all at the same point? Yes. Now that means that this move can be more extended. If the green is up and the orange is above 0 and this orange is going up, but the blue and the pink aren't, that is a pullback in a trend. Here, for instance, bearish pullback of bearish trend. This one was tricky because the orange was going up still, so I wouldn't have probably taken that with that signal alone. But here you can see that they've all flatlined, and by this point the pink and green are clearly rising, but the green doesn't actually rise until this candle. So if you waited for that green one, you'd be basically 1 bar late. But to know basically that when that happens, I can't be short. And that's where this background comes from, is the backgrounds are identifying situations in these exact indicators, right, where the direction is confirmed. Everybody agrees that we're bullish here, and that's where people start feeling FOMO, including me. Or where I naturally want to fade, right? And that's not smart, but it's what we do. Naturally, we see them running so hard that we're like, oh, if we could just get the short here, it'll come all the way down. So the truth is that's not how it works most of the time. And so I've colored the background to identify when we have all this agreement on all of these angles, that regardless of whether or not it's a derivative of the rate of change or the rate of change itself, and regardless of whether or not it's the faster or the medium or the slow, or no matter if it's the volume weighted average or the hull moving average, whatever it is, everybody agrees it's bullish. So in other words, it doesn't mean just buy it, but it means you don't want to sell until that goes away, right? Now, if this closes bearish and the pink has gone away, all good. I can sell it as long as I have a signal. But you can see why you really would not want to sell here or here or here or here. But what's interesting is that it told me not to buy on these ones. And so I'm curious about that and what that means when these are both going up, yet I'm getting signs that probably from this one, that there's disagreement here, and if anything, it's a little bit bearish. Oh, I see what it is. It's the orange. It's because the orange is so this might be something I can filter out if it's that. I don't know. I'll take a look at that. That's not how it's supposed to work. This is how it's supposed to work. But it's firing here, and I'm not totally sure why. So I'll take a look at that. It's my own signal, and it's just a new idea. It's not something I've extensively back-tested, but it's just a filter for me to plug a leak in my trading, which is shorting this and then missing this, right? Or longing this or this or this or this or this and then skipping this, right? What it's saying is, well, don't long this, but here, if you get a signal, they're no longer all agreeing that it's going lower. There is some disagreement here. Doesn't mean it's going higher, but it basically means whatever the conditions were that were keeping this from being bullish have now gone away. And now all of the conditions that have been keeping this bullish appear to be going away. So this is probably our first chance to short. And should I take it? By itself, it's going to be an orange. If it closes bearish, it's going to be an orange inside bar, which basically means there's absorption. I can already see that. Let's do it. Let's take it. Why the fuck not? 46. So my stop goes about 47. The high of that bar here, I believe, is about 46. Let me double check. There's divergence. 47. Okay, I'm wrong. So my stop's going to go to 48 in case they just get it by a tick. This is an aggressive short. Bulls have a lot of volume here, so it's a pretty aggressive short. But yeah, it's valid, so I'm taking it. and it's not London Open anymore. So there's a good chance it still works. Even the aggressive trades do work. I mean, this green candle is totally a chase, but I mean, the green is generally buy signal. I wish it was so simple that you could just say that every time it's orange you should sell, and it's not that easy. But I also have extra confidence because of the location. Is the voodoo range level. The problem is it's that voodoo range level that was the POC, right? But we traveled underneath it and then came back up and rejected out of it. So my thinking is if we're going lower, that's exactly what we do. We come back up to fair pricing and reject out. So the only reason to really take this is if you think there's a chance that you get a pretty good extension. Otherwise, your win rate is not exceptional. So you need a decent risk reward. I can't, for instance, I would not want to take this if I'm so nervous about shorting that I would take all of my profits at 10 points. I should probably just skip the trade then, because the times it doesn't work, it stops you. The times it does work, it actually like crushes. Like it goes to like 11,900 at least. Like it should be at least a 30-point trade when it's right. And if I'm wrong about that and it turns around right here, well, then I probably shouldn't be taking the trade, because the times it doesn't work, like at all, are like, it's maybe 50% of the time it just doesn't even work. And the reason for that is because bulls appear to be trying to take control, and they trapped the bears down here, right? So if these guys are trapped and it's bullish, it's not going down here. So like I would give that like a 50% probability that like they're just gonna rip it up, right? And shorts are harder than longs. You often need multiple tries to get shorts. Like they will stop you out and then turn around, like maybe twice. There we go. So I got filled on my what's it called, my core, and now I have a runner to see if we can get an extension. If we don't, it's okay. At this point, I'm the trade is practically risk free. And so at this point, you got to think like, where do you want to put the target, the second target? And I would say like the conservative spot would be back at like that 908, where I was again this bar here. It should get there. So if you're nervous about it, I'd want to you could probably get out at like 908, and it's probably going to get there. And but realistically, I should be firing for at least 890 here. Like I said, otherwise it's like, why even take the trade? Because so many times it just doesn't work. We could measure it, and we could say that it's at 11,947, we said. And so 11,9, let's see, it's 44.25 is the voodoo range this week. So just a little over 11,900, like 11,904, is it? 375 or whatever, is a natural place for a rotation. And like I said, you could easily do that with TradingView, where I put the voodoo range. You just use the measurement tool, choose the high, and then bring it down until you get to the low, 44.25, negative 44, and it is. Does it not give me the price? Or can I just not see it? Oh, it was that 902. Okay, so 902 would be like a natural place for a rotation. And again, when would you exit that? When you don't want to hold through a pullback, right? If you're afraid you're gonna puke the position when it comes back to break even, then just get out at like 903 and be happy with it, right? Because the times it comes back, tests your entry, and then rolls over, that's gonna happen a lot. Now the POC is supposed of the. Oh wait, did I not adjust this? Fuck. I didn't. Okay, where's the actual POC? Now it's moved up. I might actually, hold on. Let's just redraw this. It started there, ended here. Fuck. Okay, cool. So we got through the POC. We've now put volume below it. Meaning that this should go lower, but yeah, if I was not in the trade, I would now be able to sell retraces as long as I got a signal. So for instance, if we got this and I got a signal up here, I can actually sell it. And what that means is that if I get that, I can actually buy back the contracts I've already sold and turn this into basically like a pyramided second trade, which is a very, like, it's not something you need to practice doing that, because you can end up, if you do it wrong, you can like give away a lot of profits. So you want to, like, I've worked with my coach for a while about how to, like, when that's appropriate and when that's just straight up tilt trading. But if you have a scenario where you had a valid entry to begin with, and now the conditions have actually improved for your position, and then you get an additional entry signal. It doesn't have to be the same type of signal, but some other signal that you would have taken even if you weren't short, right? That's usually where I am adding back the profits I took. Not saying that's going to happen right now, but notice we've got the pink happening here again, which is a no short warning, which is interesting. It looks kind of similar to this, only in the opposite direction. So again, if this just drops, I'm going to need to, it probably means that both of the trigger conditions, like the alert conditions that produce that purple background, need like one more exception. Because like, here, I'll show you what these look like. So there's two of them. So like, this is the alert condition. So when all of these happens, it alerts me, and I've added an additional one that says also tell me with a slightly different time side if either of these conditions occur. And so that's why some of these pink bars are bright and some of them are dark, is there's actually two slightly different, like here we've got one pink here and one pink here. I don't know if there's a dark purple anywhere. Those are all one purple. But there's basically two different conditions that are very similar, that I want to know so that I don't take trades in that position, but in those conditions. But the problem is it appears that while it's working well here, it's telling me not to short when it appears that it's a pretty okay place to short, right? And looking down here, this is a little bit oversold. I guess this one's pretty oversold. Like, but why did this say don't buy is what I want to know. Because these, oh, you know what? It's probably because these are so high. So what I might need to adjust is say, yes, don't buy it, or signal me when these are too high, but only when the orange is no longer rising. I wonder if that would have done it. Then that would have been, here. Right there. Orange, probably no longer rising. These too high. So these become don't buy. Oh, it's actually the brighter orange. Brighter pink. Interesting. I've already got that. Brighter pink. Because there's two different colors, like I said. So what I could do to fix that, the whole problem, is just turn off the lighter one, right? This lighter purple and pink, I can just literally turn it off and leave this one. And then in this case, this would also not trigger don't short. Of course, I'd miss. Oh, and then I'd still get this one's dark. I couldn't tell from over there. Right? Dark on this. And these are not. And this one was an okay short. So maybe, like when I built these, the conditions might have been such. Oh, nice. Wait. Did I? How did I thought I had my target down at N2. Okay, I guess I must have moved it. Sorry, guys. I thought I was gonna stay in this trade, but I guess I put my exit at 905. Okay, I thought I specifically moved it to 902. Like I have an exact memory of doing it. It must have been. Huh. Okay, whatever. I mean I got paid well, so it's like a $620 trade. I'm not gonna complain about it, but I thought I had my target at 602 and it filled me at 605. But I must have moved it up to 605. I just don't remember doing it. I must have done it subconsciously while I was rambling. Let's see if it was a good choice. Because this is saying don't buy here, which probably means don't cover. But like I said, this was saying don't short here. I'm sorry, this was saying don't buy here. This was saying don't short here. Yeah. So it's switching. Oh no, it's not. This is because it's the pink, the brown yellow background, the shitty background telling me it's Globex because it's shitty trading. It just doesn't show up here yet. Okay, so the light pink and light purple might only be relevant when we are balancing. It might be that simple. That when we're not balancing, I can ignore these, but that the dark ones, or the bright, I should say bright for pink, but dark for purple, are the ones that I can use for capitulation, like this. So when the dark or the bright, when this color ends, when that stops, I can short as long as there's a signal. Wow, my exit might have been fucking perfect. That's funny. And I totally like subconsciously just put it right in the right spot. Weird. Whereas this one, I believe, is useful during balance. But I bet once there's momentum going, you technically could buy this. Even though it might not be a good idea very often. You could, it might not be useful to say, don't buy this. Because this one clearly worked. Oh, this says don't sell this, which is, right? Yeah. Yeah, don't buy, don't sell. Because once it stops, you can. So I might have to adjust how I use it, or just remove the light pink, right? And the light purple, and just keep the darker one, which is harder. The conditions for the darker one's harder, but you can see that this is slightly darker, so that was a really good one. Because right when it went away, I got a good long. But then here, see, it's light and then bright, and then light again. But technically, the long signal still would have been here, because I'm getting in with the algo. And then here's another one where it said don't buy, but it's not quite done, and then it ends a little bit early anyway. But the short signal's clearly here. This is bright. That's perfect. Bright, and then light, and then nothing, and then there's the short signal. So you can see they work. But then here it says don't. Oh, this is good, right? Don't sell this. That's great to know. But then it goes away early, and then here's the sell signal. And what I'm finding is when there's this much room before the sell signal, that this is the farthest you're going to get. Like this. So it says don't buy here, and then it says you can sell this, but we're at the wrong side of the radar here. That doesn't really count. That's not a good sell spot. If it was up here, it's different, but down here you don't want to sell that. But then it comes right back again. So I wonder if that happens, if this could be a long, because it's obviously not a short, but okay. So here it starts way up here, telling me not to long. That's fine. And then it says right here, if you get a long, go ahead and take it. Boom. But you can see when it's straight down, when there's momentum, you're going to get light going away, and that's not a good entry. Light going away, not a good entry. Dark going away, no entry. Dark going away, that's an okay entry. Dark going away, there's your trigger. So it might not be bad to just remove the lighter one so I don't get confused. Because that threw me a little bit. And you just wouldn't even see it here. You'd see it here. You wouldn't see it here, but you'd see it here. You'd totally, oh no, you'd be fine there. That's the right color. You'd miss this one. And again, during balance, these light ones work okay. But do I really need that? I guess I would know not to buy this. And I'd know to sell this. And then this turns bright anyway. So that doesn't change anything. This one's bright, so that doesn't change anything. This was like a poor signal. This one gets bright anyway, so I can still take it. And this looks like light. So I bet if it's bearish, that this could have just spooked me out of it, and it might actually continue lower. So it really might be a good idea to turn off that lighter one. Especially if I'm getting out of trades too early. Getting nervous about it, you know? Like if I should be holding here, because that wasn't a very big, I mean, I guess I just got out on the, it just supposedly hit an imaginary target I didn't realize I had. But if it's momentum, you should be holding here. But what it's saying is if it's balance, it's giving this light color and it's saying like, well, if it's balanced, don't be short. And why not? Because of this. Like it's saying it's already so oversold. Basically, that these moving averages, the rate of change has just like flattened. And the speed that the rate of change is changing has flattened. So basically the market is no longer dropping. It's no longer increasing in its like the momentum is paused, right? At least. If not reversed or just stopped. It has the momentum has at least it's gone for the moment. I mean, that turned out to be a beautiful sell. I mean, cover. Yeah, I got a 905. I thought I was getting out at 902. It reached 0375. So it did not go a full voodoo range level. It did not go to the next voodoo range level. Missed it by 1 point. So someone front ran the level. If that was you, good job. This is the problem with sharing levels, right? It's not one above the level, it's just one above the expected rotation. Because you can see that this one was above the level and then it closed below it, so that's a great place to get a signal. I still need the signal though. Whereas this one is it's between these two. And so we ran into that midpoint. Here, you can see it easily here. We ran into the midpoint here. Right? And then it tried to go lower and it reclaimed the midpoint. So now what you'd think would happen would be it'd come all the way back up and hit this. And that makes sense. Doesn't mean it will. But that makes sense. I didn't see any news on, I guess I wasn't looking. Let's see. Did they like declare war and shit? Officially? I can't tell if Putin actually talked or not. Scrolling for quotes, I don't see any. Someone from the ECB is talking. De Guindos is speaking. I don't see anything. Hmm. Yeah, I thought Putin was talking like now, but I don't see any quotes coming across, so I don't know. You know what? Maybe it's on the calendar. Let me see if they added it to this calendar. Tomorrow is the 20. Well, today is 21st. Not here. Okay. Not surprised. All right. All good. Well, like I said, I'm very curious to see if this just magically bounces in the spot I happen to just move my target to. Be serendipitous if it did. I really don't know why I moved that. I did it totally subconsciously while I was like just rambling. And I have no idea why. Yeah, it worked perfectly. And I'd love to know if it was a conscious decision or a subconscious decision. If I saw this, maybe? I saw something. No. I don't know. Unless I just literally let it go in the wrong spot and didn't pay attention. I've definitely done that before. Was it something on the candle chart? Let's see. So we're going to extend these for now until we know they're wrong. They will eventually stop working. I mean, technically they stopped working here, right? Of course, when I bought it. But that's okay because we got the sell back into it. And like I said, the natural order of things would be to come back up and test it again and then to run these stops. And that would probably run these stops.
Sorry, I'm not sure about that.
Okay, if you say so, Miss A. That was interesting. That almost seems too easy though, doesn't it? That it just like rips right through these. But we had clear support here, tested, broken, capitulation. See how the volume here? Right at London Open. Then rip, V, right? And then a little bit further, they take these stops, but can't get these and turn around right at the voodoo range level, right? Like they can't close above it. See that? Tested above, can't close above. Where do they go to take out these stops? At 12. They get to 903.75. I get out at, I guess it's these. That must have been it. When I was measuring, is what I did it. So I was measuring from here, and I was trying to find 44.25, which is one voodoo range. Oops, I just saw it. And that was 02, and so I was going to put my stop at 03, or my target at 03, thinking if it hits 02, I'll get filled at 03. And then when I was trying to drop it, my eyes were looking over here, and for some reason I saw 05, like right there. And then when I went back to the DOM and intended on putting 03 in, which is what I said I was doing, and what I thought I was doing mentally, as I tried to talk and work at the same time, the number that my brain told my hand to drop it at was 05. Even though I saw 02 and said 03, I said it had to be above 02. And I said 03, but like I said, I must have just dropped it at 05 or moved it back to 05 without even thinking about why. Which, like I said, worked out beautifully. But I'd really prefer that those decisions are conscious, because that could have worked out in the exact opposite way, you know? So it probably just means that I shouldn't be trading full size when I'm streaming. When it really comes down to it, that's the solution. Stop giving away all this and giving and limiting my concentration. Okay, so see how this one's a little bit darker? Oh, never mind, it's not doing it. Well, it's trying to. When it closes, if this is just a little bit darker, or brighter, I guess I should say, than this one, that is that capitulation sign, and so it can go on for multiple candles, but when it stops, and it's just black or whatever, greenish brown in the background, yellowish brown, that actually, if that very next bar, after that bright pink stops, right, this bright pink, if that stops at the very next bar, and it's an algo signal, like that's a cell, like an orange candle, like right here, if this is not pink at all, it can't be light pink either. But the next one that's not pink at all, the background, right, the next black background, or yellowish green background over it, that also has an algo signal that is an identified cell signal, like an orange candle or a star or a diamond. It's probably the location for the short. Doesn't always work on the first try, but the location is usually accurate, just like it was here. It's so interesting to me though that this lighter pink showed up early. It's cool, but it's only going to work like that when it's balanced. And just to know how to handle that in the moment without having to think very hard. Because that's the thing, the whole point of all these visual signals are to make me be able to just make decisions without having to think about it. It's to make execution more automated, right? But if I have to think about these, like, is this the condition where that works? And it's not like practiced to the point where I can just execute it, like, I'm probably better off not having it on there at all. So what I might have to do is something like add a condition that the light pink can only show up if the previous one was bright pink, so that this one warns me not to short, but I don't care about these. But when it's in balance, it is kind of nice to know not to short this, but I don't really need the background to change to know that. I wouldn't short this or this anyway. But knowing not to short this is super helpful if it's balance. And like I said, the problem we saw back here is that we were seeing don't buy signs when there's momentum to the upside, and they clearly did not. They weren't meaningful there. So I guess the choices are remove the indicator completely if it's causing too much confusion. That's always an option, and it's usually a pretty good one, right? Or at least like give it a break and see how you do without it. Or add more alert conditions so that it only shows up when I know it works. And just, for instance, I know that it works in balance, so I'd have to define for Sierra chart what balance looks like. And so an example might be that this midpoint here has to have a very slow rate of change. That might be a very easy way to do that. Or I could do the moving average rate of changes are not aligned. So see how the green one's down here, but the blue and the orange one's up here. They're not all together like they are here. So here you can have a pretty big move. But here the green is falling and these are rising, so they're crossing in opposite directions. That makes this more like a retrace. So when they're going in opposite directions or they're not all together, it's more likely balance, right? At least on some time frame. So that's another way I could describe it, right? Just say like totally ignore it unless you have these conditions. Or I could do the opposite, where I say, Yeah, only have it do it when it's in balance, or for like don't even use it at all for balance or in momentum because I know it doesn't work in momentum. But the one time when I might want it to show up is when it's going with momentum, right? It's not going to work as a counter trend measure with momentum. This is clearly not a. This says don't buy this, and then this one says yeah you can buy here. I mean, unless you want to buy the pullback there, maybe that works. Oh, you know what? Does the pullback here work? Kind of. Okay, and so then the question is, this is the short. The pullback here clearly on the short does not work. But what I was going to say is the other place where it might be helpful is when it shows up right after the dark one, or sorry, the bright one. Because we know if the bright one goes away and there's no light pink and there's a signal, it's usually pretty good short. But if the bright one goes away and the light one's still there, it's actually been there the whole time, then it's probably not ready yet. So that's why I have the two, but in reality, on this side of the bright, I don't really need these. And sometimes it's not going to make sense. But when it comes after the bright, it might actually save me some stops. So again, I'd have to test those options and see what I trade with best. If I trade better if I just turn it off. If I trade better if I tell it only to trigger during balance, or if I tell it just ignore everything unless the previous bar was also like pink. I mean, but only the bright pink. This condition here, or here, which means these would go away, these would go away, but this one would stay. Which, like I said, is the one place where I pretty much always respect it. Is if it says it's not ready, it's not ready. Oh look, so it just disappeared. And again, it'll do that until it closes. New signals can show up too. Once it closes, it's going to stay the same, with the exception of these waves, because these are Weiss waves, basically, but figured for Renko. So once the wave is finished, it stays the same, but they can switch colors and then switch back the very next bar. Once you get the second one, though, it's not going to change, but it can reprint those wave colors for one bar in the previous. That's the only one that can change after they print the bars. And like I said, that's just literally the way that Weiss waves work. Is they are based on future information, right? They change based on what happens after this bar. So that's why they appear to reprint, is because they're Weiss waves, which in retrospect make a lot of sense. But the current bar that's printed is not necessarily confirmed green or gray, because the wave, what Weiss calls a wave, isn't determined until you've had the turn, right? So it's not a method for finding the top and bottom. It's only a method for measuring after the top or bottom has been found, for determining where to start and end your measurements if you want to see what happened during that turn. So for instance, wow, this is a huge wave. For instance, this goes from the bottom of the wave here to the very last green wave, right? And you could do the same thing here for the gray wave. And so what that's telling me is that I've got a POC here and a POC here. So, and momentum is up. So to really think that this is going to break down lower, we would need to get under both of these and develop volume down here. And then if we get a retrace, I can sell it. But first, we need that push. And because I don't have risk reward to sell here and to exit here, you just can't sell this. Like this one is in a great spot. We're hitting it, getting right over it. Pretty sure. Oops, I missed it by a tick. Pretty sure that interacts. And so that's good. But the wave back down. Yeah. Oof. Did I hit it? Yeah. By one tick. And it's a star. So if this wave had all the volume at the high, that's a short. But because this wave down didn't have its volume at the high, I can't short it yet. Because what's usually going to happen is this guy, this green candle, is going to defend his position. Meaning that I won't even get 1 bar of downside extension. So what's the point of shorting? Even though there's a signal that there's someone aggressive shorting there. And potentially someone trapped above him. In this case, when it's a star. But what's the point of shorting when basically we would also need to break through this to get any extension? Like, why not just wait for that to happen? Your win rate's going to explode if you can tell the point where shorts basically have an advantage. And in my experience, or our experience, that occurs once you've gotten beyond that previous wave's volume build and then developed volume below it. You don't have to sell it there, but you can now be bearish. Finding the actual point to sell requires more work, right? You need to actually wait for that aggressor to come into the market. At least that's the way we do it in the trading perform room. Because we don't want to be the ones being like turning the market. We want to wait for somebody to aggressively attack it and then piggyback on them. So I don't want to try to guess that this is going to be the high. I want to wait until I see the star print before I even think about being bearish. But in this case, I don't think it's going any lower than this with very much confidence. And if it does get here and bounce, it's definitely not bearish. So why not wait and see if that doesn't bounce? Then potentially get a retrace and get short right here anyway. And then like the 50% of the time it bounces and doesn't turn around, I just don't lose anything. But when it does get down there, develop volume, and retrace and set up a short signal, that's going to work like 70% of the time. Which means I can take bigger size with it. You can see on the higher time frame that we've just like gotten to the point where there's no rotations. This is generally one of the spots where the algo does not perform well, where signals like stars and orange bars and stuff like that will start to not be meaningful, especially on the smallest of time frames, because on the higher time frame you're basically trading within a range. So you can still use these levels, but if you get a star that's way down here and you really should be getting short up here, you're potentially shorting right into support. So it is important to be aware of where we're trading. And like I said in the very beginning of the video, the most important thing is if it's balanced, don't trade where everybody else traded already, which is exactly where we are. This is by far the worst place to trade. You can see that the trade up here worked, but that's because range had expanded and we were coming back to retest it. And like I said, my initial idea here was that people are going to start thinking that this low is going to get taken out. It looks like a retrace and then a third wave down, right? Even if I don't hold it that long, the likelihood that they accelerate selling into this is higher because they put this low in here. And it can start right here. It doesn't have to take this out because we extended the range to the downside. But that also means that the next time we move, we can extend further in either direction. You can see it here too. Like every time we extend the range, the likelihood that that next move is also a higher range move is increased. But keep in mind that this next move here is actually an inside bar compared to this wave, right? This wave, the price action of that wave here is completely inside of this wave. As soon as you see that, which is the opposite of expansion, right, contraction, you should assume that what you're going to get here is consolidation. So you have to be really strict about which extensions you're going to sell or buy. So I would no longer be buying this and selling this. I would wait for that extension and buy this or sell up here, right? Back up here. I want to see right where they were extending before. I want to see that beat. I don't care so much if this consolidation's beat, because what you're going to get is you're going to get short here, and then they're not going to take the low out. You're only going to get like 6 points, and they're going to bounce. So the same exact thing happens here. We had extension. The next move was consolidation. The next move is consolidation. The next move is consolidation. I don't need to get long here, right? It can go bounce, 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 bounce until eventually it breaks out one way or another. I don't need to be first. I can wait until that happens, and then let's say it goes higher, and then wait for it to reverse up here and then short it. Or if it goes lower, wait for it to reverse down here and then buy it. That's a good example of what I was saying in the beginning of the video, if you've been through it with me for this long. We are coming up in 3 hours, so I'll probably start to wrap it up. I do plan on trading tomorrow. Don't want to stay up too late. Definitely glad I'm green. But, like I said, this is just not a great place to take a trade. Which makes me favor sleep over watching it. Because I can't think of a condition that would get me long or short here. I guess the only way you could do it is if you dropped down, came back up, retraced up to here, and then triggered short. Otherwise, we're going to have to take out a swing. But those slow developing moves, they can take a long time in Globex or London. They can take a long time in New York. But if you think about it, like this move down only took 10 minutes, 15 minutes. This move up has taken almost 30, right? So if you think about what that means, all the momentum was to the downside and everybody got short. And then they grinded back up. So what would we have to see to think this is bearish? Probably increase in speed. What does that look like? To the downside, it's a red diamond. Let me find one right here. So if we started a rotation with one of these bars, that would suggest that we might be doing another push down to the downside. Otherwise, this grind up looks pretty bullish. And like I said, the only thing that changed my mind about that is if we can develop sell volume down here. And then I'd have to wait for the retrace to get short. But at this point, it really does look balanced. And like I said, if that's not clear on the Renko chart, it should be pretty clear here. But you can see, like, this long doesn't look that bad. This one was hard to take, and I didn't. But you can hopefully see why I took this one. Because it really did look like it was going underneath, and then when I come back, it just didn't quite get me back to where I needed to be. But I'm thinking here we are consolidating. So we should be waiting for range expansion to really be trading a mean reversion strategy. We are at the mean already. It's already reverted. The blue dots here is the 3-day POC, and we are right at it. Literally the worst place to trade. Previous day or previous 2 or 3 day POC is just a chop fest in there. Everybody's getting steamrolled. And what you'll see is algo triggers like this that interact with this blue dots are not as reliable. This one even, it's like it did work eventually, but you can see that it didn't work right away. And if it's not totally bullish, that stop gets taken before they go higher, right? So you're better off not buying in here and just waiting for it to set up. Now, this one might have been a little bit iffy that I even took that because it's so close to the POC and I had to go through the POC. But I'm almost, at that point, I'm almost taking advantage of the fact that we're at the POC because I just wanted to trade through it. So if you can approach the POC and take targets in there, that's fine. Oh, there's our speed bar, just to the wrong direction. So star down, speed bar up is really bearish or really bullish. So someone is trying to commit to pushing this with momentum. I don't see a lot of bullish momentum. So that is a curious decision by somebody. Whoever on the footprint is being seen pushing price up quickly, despite the fact that it's not pink. So it's not like sellers were just pulling their orders. Someone basically put out a big order and probably had it sitting there on the ask and just decided to fill it, mark it in. That's usually how you get those. Because we knew they were a buyer, they were down on the bid. They weren't getting filled, so they just hit the ask. That's what I was trying to say. And so they're able to sweep the book across multiple price points, right? Multiple ticks. And so the result is a bar that's forming much faster than you'd expect. Now, if it's in the right place, like down here or down here, that can be pretty bullish, right? But you can see that when it's in the wrong place, like here and potentially here, what you're going to get is chop. Because someone's making a aggressive move right into an area where there's sellers. Which, like I said, doesn't make a lot of sense to me. But I don't know what it is, right? It could be someone frantically covering because they're in London and headed out to lunch or something. I don't know. A little early for lunch, but yeah, we don't know why, and it doesn't really matter. So if this prints with this arrow, that's a new signal I'm using. We're gonna look at where the next bar prints up or down, and that's gonna give us a potential pivot point. Similar to these white lines, and you can see in the last time, this one, that's not a good example. This one did it. That becomes the pivot. Now this one didn't go anywhere. I took that trade. Whoops. Did not mean to do that. And this one we haven't even gotten down there yet, except for this bar. Did pivot here. When they go in the same direction, it can just be momentum. But when it prints a bar with an arrow and then goes the other way and then gets behind the bar with the arrow and turns around, that's actually a trap. So I don't know if I'll get to show you that, but one of these days you'll see it. So in other words, if this closes bearish and that yellow arrow still is there when we close, if the very next bar is bullish, what we'd be watching for is for them to spike up and then roll over suddenly. Because what this is finding is a pivot to the sell side, but when you get defense right away, when buyers defend that level, you'll generally see them give up the sellers give up for a moment and then re-enter the market, and as a result, taking out this liquidity, filling all those orders up there, stop orders basically. But you can see that we're getting all sorts of algo signals right at the POC. We got star down, we got diamond down, it's kind of covered up, which means we got a lot of volume. The star suggests a trap, and then this is speed, right? Now we have a star for trap, and now we've got the arrow for potential pivot. Like, all of these signals are triggering in the same spot, going in two directions, and that right there should be a sign that we probably shouldn't be trading in this area, because something, whether it's VWAP or VPOC or whatever, something on the chart is just getting people involved in a way that is not random if it happened anywhere else. But when it happens here, it's kind of random. It's like they look like they're doing something unusual, but all it is just more people taking trades at the POC. Because big institutions, or anybody who's okay with holding futures for longer than 15 minutes like me, is they're gonna be fine adding or subtracting from their position at the POC. They're not that concerned about that, right? Like, they've already picked a direction and they just want a fair price, or I guess an unfair price. So if they think that the price is going higher in their time frame, the fact that this is yesterday's POC or the 2-day POC or whatever, that doesn't matter that much. As long as they think that it's going up, they're good. What they need to do is fill their order, right? So if they got in 2 days ago and they want to add, the client calls back and says, hey, add to that order, which isn't unusual, then you would end up seeing more activity at the POC. Not because anything's changed on this time frame, but just because people have already committed to trading there. The market did something, and now it's returned to that level, so they're going to defend it. Maybe they only fill half their order. Maybe they decided, either the trader or the investor decided to, 2 days later, is more confident than they were before, or less. Maybe they got in at 2 days ago, and then something occurred, and they got back to break even, and they're like, you know what? Let's get out of that position and do something else. That's pretty common too, and it happens at the exact same spot for that trader. Well, the POC is where the majority of trades are occurring. So the chances that you have those little rebalancing, there's no other price more likely to have that kind of randomness than the previous POC. And that's why you get signals that don't end up really working out very well right around the POC. The other level, like I said, is VWAP. That's another really common still. More so before, but still now. People will just like play VWAP. Like if it's like they can continue to short as long as it's above VWAP. And then opposite if it's below, right? So the result is, at that level, right at VWAP, you're probably gonna have a lot of signals, because suddenly those traders who made a decision near VWAP are now changing their mind because it's on the opposite side of it, right? Or it's retested it. So slow. Do something. At this point, I might just call it a night, you guys. It's just not even rotating now. Welcome to pre-Fed. Although I will say, the last couple months, the morning before Fed has been a huge rebalancing day with big ranges. So this lack of price action might actually change in a matter of hours. I can't do a whole lot with this. I'm glad at least we did get 2 trades and that one of them worked. And you can see how a trade can, you can have a win and a loss and still be up on the day because the win paid you more. And notice that I got out of that, that second trade. The first one we just stopped out, right? It missed my initial target by 4 points. But the second trade, I still took profit where I'm supposed to at 10 points and then held the runner till 05 or whatever it was. Even though I was down on the day, which meant that had my runner not gotten filled, I would still be red on the day. So we can't be making decisions on our trade execution, trade management based on our daily P&L. It needs to be based on like objective, like either optimization or just like a strategy. And that strategy can't be stay green all day. It can't be a fantasy strategy. It's got to be a strategy that actually works and is executable. I'm really hoping that this arrow prints so I can show you how this works, but it's like literally like not printing, but not printing either. It's just doing nothing. So slow. It's probably not a very good example of it anyway because we're at the VBOC. So that being said, I guess I'll probably just call it a night, you guys. Like I said, it's not really doing anything. And now that I think about it, even if it did, it's not going to be a good example because of the location. So, all right. Well, hopefully these 3 hours were useful. If you have any questions, you can always reach me at RedBenTrader on Twitter.